I am the early bird today. It's all right. Chef, how you doing? Cav, nice to see you. Hope you guys had a great weekend. How's everyone doing today? You guys feeling good? Everybody a little bit smarter thanks to my big brother. Did you guys enjoy Friday? Little tips and tricks to make you better. Little tips and I'm telling you guys, what he does for the person that has a great foundation is outstanding. Once you've got those basics down, holy smokes, he'll take you next level without a doubt. I know because every morning he and I talk back and forth about what we see, what we're doing, the patterns that we recognize. I'm thinking about signing up for his class. You watched this video last night? It's a good one. It is definitely a good one. And it's all based on everything that we talk about in here, guys. It's based on everything that we look for in the morning here. But the first thing that we look for in the morning is news, right? Making sure that we're not trading into something that's going to make the market act sporadically. And that's just forexfactory.com. I'm going through every morning. I'm looking for high probability, for medium probability. Pretty slow news week. Nothing going on today. A little something tomorrow, but not much. And then Wednesday is when we have our first one. I guess Powell's got something to say. But really, there's not a lot going on this week, which is never a bad problem. And then everything that I talk about is coming from the education page, guys. And we're going to do it from the tutorial section. And I'm going to sum it up for you real quick. What are we looking for as traders? Guys, there's a couple things that we're going to do. I'm going to open up the S&P chart nice and big. And, of course, it's the weekend, so it's maybe not the best. But I want you to see this great big blue Fibonacci area that held. This is our best look, guys. This is what we're going to study today. We're going to look for great tops and bottoms. Areas where the market reverses right off of these fibs, yellow 1-to-1s, and then looking for opportunities after. And that's really what the day is going to be. See it again right here, guys. Blue fibs hold like they were meant to. And then we're going to look for opportunities after. And then once again, red fibs hold. Good morning, D-Rock. And we're going to look for opportunities after, guys. When these areas of support break, they begin to act as resistance. Each and every one of you in the room is going to be able to recognize that. That becomes your best of the best. And that's our day in a nutshell. And you guys are going to learn this. Just this little recognition, areas where the market is likely to stop, support becomes resistance, areas where the market is likely to continue, and understanding where the market is likely to go. And all of this comes to be from one trade, giving you the ability to read your charts, to understand the information so that you can take it and capitalize on the advantages that are present. And we do that through a high probability trend trade. And this is really our first hour each and every day as we're focusing on this high probability trend trade. We're looking for a trade where every indicator on every chart agrees for the trade, where the triggers are the strongest, there's nothing in your way. And this becomes a trade that typically wins 70 to 80% of the time, guys. So this is your foundation. If you're brand new to Nexgen, if you're in your first week, your first month, your first year, it doesn't matter. Once you're confident in this high probability trend trade, these three rules that create three advantages, you're going to be able to read your charts. And once you're a chart reader, the world is your oyster. Because chart reading is what we do. Chart reading is 90% of our day. We're going to look for these advantages. And if they're not present, we have the ability to do absolutely nothing. And that's really kind of the beautiful thing about trading, guys, is if there's not a statistical advantage, if there's not rules met, it's okay to do nothing. It's okay to not be in the market. You don't have to be in the market every second of every day in order to be profitable. And the reality is that 90% of your day is going to be spent just waiting for these advantages to come into place. 10% of your day, you get to be a trader. Guys, we are professional waiters. And we're doing that with chart reading, guys. And your chart reading is going to give you three very key concepts. You're going to be able to look at your chart. You're going to be able to read your indicators, and you're going to understand where the market is likely to continue. This is going to be your continuation, or not your continuation point. Well, I guess it is. It'll be your entry. for the highest probability trend trade. This is where you're going to enter the market. You're going to pinpoint with amazing accuracy. You'll be able to reduce risk. You'll be able to maximize profit potentials. But you're going to do this through your chart reading. You're also going to understand where the market is likely to go. This is going to help you use strength in the move. This is going to help allow you to use Fibonacci for great targets. And then finally, you're going to understand where the market is likely to stop. And those are those areas that I circled just a second ago. Understanding that this great big blue line is telling you that the market's probably not going to go down anymore. Don't take any more short trades. And a lot of times, this is enough to keep you safe, but not only that, this is going to have you exiting your positions. Same thing with blue lines, with red lines. Where the market is likely to stop are what we call termination conditions. And when termination conditions break, for example, support, they become resistance. And this circle represents exactly where you're going to be entering the market, guys. So everything that we do is based off these simple concepts, understanding where the market is likely to go, understanding where it's likely to stop, and then understanding where it's likely to continue so that we can jump in and take advantage of it. And we will do that with the high probability trend trade. It's only 3 rules, guys. We're going to keep it simple. The first rule says strong triggers. You will have the advantage of momentum if this rule is true, which means that you're in a market that's likely to continue in the direction of the trend. Rule number 2 says no termination conditions. None of those big blue and red lines, yellow 1-to-1s that might stop the market. This is going to keep you safe from trading into areas that can create that bounce. Because these key Fibonacci areas that you have on your charts, these are where the deep pockets investors are making decisions. These are where buyers buy and sellers sell. This is where profits are taken, and this is where the smaller trader like us doesn't have to get caught in their reaction. We can sit on our hands and wait because we know about these key areas long before we ever get to them. And then finally, we're going to have the entry rule on the smaller, faster chart that's going to have you getting in at these key areas inside of trigger lines. These 3 rules come together to give you the advantage of momentum through the strong triggers, the clear path by not trading into those termination conditions, and then the entry area, being able to recognize where the market is likely to continue. These 3 rules happen on only 2 charts. And I'm telling you this as the brand new user. Using 2 charts is going to keep you focused on the best of the best and identifying advantages. And then once you're comfortable with that, once you become a chart reader, well, then you're going to begin to add maybe a higher time frame or maybe a market flow chart, taking advantage of John Novak's amazing lessons. But you've got to build this foundation first. And that's what we're going to do this morning. We're going to focus on the highest probability trend trade, and we're going to use the 2 charts. The large chart is a reflection of what the large crowd wants to have happen. The people that move the market, the guys with the money. They will establish direction. Excuse me. They will create momentum. And then these are the people that are reacting to those key areas that you're going to be able to recognize. And we're going to follow the large crowd because the large crowd tends to win. This is where we get that outstanding win-loss percentage. And then the smaller, faster chart, guys. This is a refinement tool. This is taking everything that the large chart says and just really whittling it down to that point where the market is likely to continue, allowing you to reduce your risk, to maximize your profit potential. So when we look at the 2 charts, your large chart will define direction, momentum, and areas. Your first 2 out of 3 rules are going to take place on this chart. And when they are true, you will have momentum and you will have a clear path. And then once those are in place, you're going to be able to use that smaller, faster chart, that refinement tool. You're going to take 1 bar from your large chart, turn it into 15 to 30 bars on a smaller, faster chart. And this is where your entry rules, getting into the market where it's most likely to continue, happen. So 2 rules. Let's keep it simple, guys. Let's start at the beginning. It's always the best place to start. And let's define momentum. Let's define strong trigger lines. The first thing you're going to have to do is define the trend, which is really the easiest lesson you're ever going to get. If the background on your large chart is green, you're in an uptrend. You're only looking for rules to be met for high probability trend trades long. And if the background is red, you're in a downtrend and you're only looking for rules to be met for high probability trend trades short. And you're doing that because this is the only way that you can have strong triggers in an uptrend. Small triggers, these solid lines, are going to break above your large triggers, those dashed lines. It's the separation between the two. When there's a gap between the small and the large, like scissors that are open, wide, ready to cut, this is your best of the best look. This is what we call strong triggers. And when you have strong triggers, you're looking at a market that's likely to continue in the direction of the trend. And then, of course, in a small trend, or in a short trend, downtrend, excuse me, it's the exact opposite. Small triggers, the solid lines, are below the large triggers. There's space between the two, once again, like scissors, just prepared to cut. This lets me know that the odds are favorable for the market to continue in the direction of the trend. And then once we have that strong trigger line, this is the most advantageous look for buying Fibonacci support on that smaller, faster chart. On your large chart, one bar, it'll appear as a tail or a wick. Because of the methodology, we don't trade these tails or wicks, but I'm going to show you how to use them as a study tool to build trust in the methodology so that you can go back and take this look on a smaller, faster chart and see what the pullbacks look like. And then in a downtrend, this is your best of the best look with those strong trigger lines for selling Fibonacci resistance on that smaller, faster chart. And committing to rule number one, committing to those strong trigger lines creates a huge advantage for the new trader because these strong triggers are going to be pushing the market in the direction that you're trying to go, that your rules are putting you. And what you're going to find is that strong triggers cover mistakes. And then the opposite of strong is important to understand because if the advantage of momentum isn't present, you're not sure what's going to happen. So when those small triggers work their way inside of the large triggers, we call this a weakening of the large triggers. And just the word itself, weak, lets you know that the advantage is gone and anything can happen up or down with these weak triggers. It's important to understand that. And you're going to see these weak triggers very often preceding a reversal in the market, or maybe just a deeper pushback that becomes a little unsellable or buyable. And this picture reminds you that you're a chart reader, that 90% of your day is spent waiting for these advantages. 10% is going to be hopping on them when they're present. In this picture, I love it because it goes from odds favorable to those anything can happen weaker triggers. And sure enough, there's a reversal that produces odds favorable. There's one of those tails and the market continues up, right up to weakened triggers, reverses once again, and it works itself into a frenzy where the triggers don't match the background or one another. And we don't have odds favorable momentum here. And this becomes an awesome moment to pause for the new users to say, I don't have odds favorable. I don't feel like I have that advantage of momentum. Therefore, I'm going to choose to do nothing. Because you're going to see this look when the buyers and sellers are fighting, when they both want to take control and neither wants to yield. You'll get this indecision. It's like a transition period. Ultimately, somebody is going to win. But sitting on your hands and doing nothing while they figure it out is going to keep you out of the middle of that fight. So rule number one, guys, pretty easy. Identifying the trend. Let's go back and do it real quick. What direction is the trend on the S&P here? Brand new users, help me out. Let's make sure that you can go with the right direction. Anybody? Nobody? That's okay. We're in an uptrend. That background is green. I'll help. I don't mind cheating, guys. Long. Absolutely, Chariot. We're looking for rules to be met for long trades. In crude oil, we're in a downtrend. Notice that the background is red, and it keeps you focused on this is the only way that I can have that odds favorable momentum. And sure enough, I do. My small triggers are below my large triggers. There's space between the two. And I'm getting this information from the first bar, guys, from one bar on that large chart. It's letting me know exactly which direction and what sort of strength the market has. And then here I'm in an uptrend on the NASDAQ, but notice that my large triggers are not wide. They're not pushing in the direction of the trend like they were in that picture, which means that while I am in an uptrend and my small triggers are up, I'm in that transition phase where they're trying to figure out what they want to do. And we get this information on one bar on that large chart, guys. And this is the first piece of the puzzle, is making sure that you can recognize odds favorable momentum, that you can look at it and say to yourself, this is a market that's likely to continue in the direction of the trend. And once you have that advantage, you're going to take your ability to read your charts and you're going to make sure that termination conditions are false, that you do have room to your profit target. And a termination condition, like we saw earlier, is nothing more than areas that may reverse the market, that may create a bounce. These are the points at which the people that move the market are making decisions. The buyers can be in control all the way up to a key area, even with odds favorable momentum. And this may be where the sellers take over. This may be where the buyers take profits. But Nexgen users know exactly where that area is because it's going to print on your screen and it will have been there for a while. And the areas that we're looking for, red Fibonacci resistance. We also have blue Fibonacci support, these yellow 1-to-1 dots, as well as divergence highs, which are magenta lines, and divergence lows, which are cyan lines. And these lines will print from a pivot if there is a loss of momentum. And that's all divergence means, is if there's a loss of momentum. And what you're going to find is that these areas, NASDAQ is a horrible market to do that on. Let's look at crude oil. I think they were pretty solid this morning, right? From Fibonacci resistance to Fibonacci support, Nexgen users knew not to go long or not to go short, and we're looking for opportunities in between. There's one of those divergence high lines turning the market, making it go down with odds favorable. Fibonacci resistance, Fibonacci support. Guys, you know about these areas long before you ever get to them. So even with odds favorable momentum, we reach an area, you can say to yourself, hold on a second, this area may create a bounce. It might push it up further. Or this Fibonacci resistance, it's easy to say, it may push the market down. Let's not go long into it anymore. And you're able to identify these areas pretty simple. It's a two-part process. The first one is that price reaches the area. Those dynamic Renko bars are just a reflection of price. And what happens is they will push up and down as price fluctuates. And when price reaches an area, that's when decisions are made. Price gets to, for example, here, Fibonacci support. Well, there may have been sellers that are taking profits or buyers that are ready to enter positions. We don't know which it's going to be, but what we do know is that when price reaches that blue line, some decisions are being made. And our trigger lines will give us a little foresight on what those decisions may be. If the trigger lines remain above the area that's been reached, don't go short into it. It means that this is an area that may reverse the market. Termination conditions are true, and you no longer have a clear path. And then you'll see price reaches Fibonacci support up top, and we know to do nothing in the moment because we're just not sure what's going to happen. We're waiting for the clear path. We're waiting for either the market to reverse or for this area to break. Well, when the small and the large triggers get below Fibonacci support, it begins to act as Fibonacci resistance. And you'll see that the market loves to pull back to retest. And when it does it with odds favorable momentum, and that path is now clear, you guys are going to be able to pinpoint exactly where this spot is on a smaller, faster chart, take advantage of the momentum in the clear path, and run that thing all the way down to where the market is likely to go. And this is where Nexgen users find their advantages. And you'll see it all the time. Resistance breaks, behaves as support. Resistance breaks, behaves as support. Termination reverses. 1-to-1s break, behave as resistance. Support breaks, acts as resistance. Over and over and over. And then you're just going to be able to decide when those rules are met, when the advantages are in place. But look at, even with odds favorable momentum, price reaches Fibonacci support to the tick, ladies and gentlemen. This is accuracy, which means that we're not looking for short trades into this area. And thank goodness that we weren't, because look at the bounce that it's creating. So termination conditions are designed to do two things. The first thing, it's going to keep you safe. It's going to keep you from trading into areas that are likely to stop the market. It's going to allow you to make good decisions. Initially, very cut and dry, very black and white. You'll recognize price reaches, no triggers, no trade. It's that simple. And as you mature with the software, as your chart reading grows, you'll begin to understand more and more when areas do, in fact, have the potential to break. And you'll be able to take opportunities into these areas based on whether or not it's coming from a termination condition that creates a full reversal, gauging the triggers and the strength behind them. But I'm going to take a picture of this one, and we're going to talk about terminations real quick and how our job is just to be patient. Because when price reaches Fibonacci resistance and all the triggers remain below, this is a textbook termination condition. So my newer users in the room, do me a favor. If you're comfortable with the recipe, price reaches an area. If none of the triggers get through, sit on your hands and do nothing. Let's wait for the reaction. Here, the reaction, is that the sellers push it all the way down to Fibonacci support. And when you get there, simply ask yourself, where are my triggers? And if none of them break, you have the ability to not trade into that area of support, to say to yourself, I need to wait for a clear path. I need to wait for my rules to be met. And what happens is support pushes all the way up to resistance, no triggers, no longs, that's a termination. It also reaches this divergence line, a second termination because the triggers remain below, and a second level of Fibonacci resistance, 3 termination conditions in the same place. Guys, when this termination condition creates the full reversal, you get odds favorable momentum, small below the large. There's one of those tails once again. Guys, this is your 90%. This is waiting for the advantages to set up. This tail, with odds favorable and a clear path, this is the 10%. And this is where you guys are going to be able to refine on that smaller, faster chart to take advantage of what's just happened and look for that highest probability trend trade, the one that typically wins 70 to 80% of the time. Another great picture reminding us that we're not in charge, that we're letting the people that are do their thing, and we'll be patient when it happens, guys. Even with odds favorable momentum, this market is railing down directly into one-to-ones. When it reaches the area, you guys are all smart enough to simply say, where are my trigger lines? And if they remain above that area of support, those yellow one-to-ones, no more short trades into the area. Guys, I'm going to ask again because I'm pretty good at this. I want to make sure that you're comfortable with it. Chris, Michael, Chariot, guys, are we good? If price reaches an area and the triggers don't break, let's sit on our hands and do nothing. This is such an important concept, and this is probably one of the most broken rules, which is why I spend the most time on it. Look what happens off that key area. The buyers fight back, right? But the sellers aren't done. And the buyers want to win, and the sellers don't want to give up, and the buyers want to win, and the sellers simply don't want to let go. Once again, guys, this is your 90%. This is where people that don't have the advantage of Nexgen, that don't see these key areas, that don't use trigger lines for momentum, this is where people get chewed up. This is where accounts end up at zero. You'll notice, though, none of our rules are met during this fight. All the triggers remain below resistance and above support. We have identified this incredible channel where we don't want to get caught. Ultimately, small and large get above resistance and it behaves as support. Smalls work their way outside of the large. There's one of those tails, one of those pullbacks where you guys are entering the market and using that momentum to take you up to Fibonacci resistance. Guys, this is something that you're going to be able to do every day. You're going to be able to identify the situations. You're going to be able to understand. Whoops. I have locked up. There we go. You're going to be able to understand that the path isn't clear, that the fight is on. Sit on your hands, wait for the advantage. And guys, this is how you're going to make your money. So termination conditions, rule number 2. Whoops. When termination conditions are false, you have a clear path. And that clear path is going to make it easier for you to hit your profit targets because there's nothing in there to create a bounce. And I'm going to go to my pictures here. And this is your termination condition lesson. If price reaches the area and none of the triggers break, there is no trade. There is no clear path. You've reached an area that may stop the market. If both the small and the large break through the area, now resistance begins to act as support and vice versa. Both triggers through, there's one of those tails with odds favorable, off you go. And then your third scenario, guys, and this is what, when you break out of that high probability trend trade, this becomes an opportunity when your small triggers absolutely smash through an area. And I mean absolutely smash through, not eke their head through or just kind of poke through. But when they go blazing past that area with odds favorable momentum, you've got an area with the potential to break. We call this a 50-50 look. And it's not 50-50 because that's the chance of success. It's 50-50 because 50% of your triggers are through and 50% are not. And the recipe for a broken path is 100% of your triggers through. But this 50-50 look with odds favorable gives us the potential to break. And this is going to set you up for your next trade, for your second trade, that 50-50 trade. And you'll be able to take advantage of this and catch those little pullbacks and catch that first trade on areas that may break. So I'm going to put this in the room. These are the three scenarios: not broken, totally broken, and potential to break. In the beginning, we're going to focus on a clear path. We're going to focus on nothing in the way because this creates the highest advantage, the biggest chance of success, and we're going to create a lot of confidence through the memory of success as a brand new user. Once we have termination conditions out of the way, once we have that odds favorable momentum, all you guys really need to do is figure out how to take an entry. We need to get into the market at the absolute best of the best spot. And we're going to do that with rule number 3. And rule number 3 is designed to refine that broad stroke of a brush, to take everything that the large chart is telling you and then literally refine it down to an area, a window of opportunity where the market is most likely to continue. And we do that when the small crowd begins to fight the large crowd. When the small crowd, even though the trend is up, they want it to go down. Even though the momentum is up, they want it to go down. And these guys give us our awesome pushback to the point where the market is most likely to continue. And this is where you guys are going to enter the market for that highest probability trend trade. So when the rules are met on a large chart, this is going to be your look on the small chart. In this particular example, we are in an uptrend on the large chart. The momentum is its absolute strongest. There's nothing in the way, no lines to create a bounce. So we have the advantage of momentum. We have the advantage of a clear path. The large chart has done its thing. We've made the decision it's time to look for an entry. And we're going to look at the small chart. And we're going to wait for the small crowd to do their thing. And what we want is we want them to give us a retracement. Our rule number 3 says, in this particular case, we will buy a pullback, a small retracement in price that's counter to the underlying trend. And we're going to buy that pullback at areas, fibs, mid bands, yellow 1-to-1s. But the key to the success here, guys, and the big advantage comes from, we want those areas to be buried inside of what we call favorable large triggers, meaning that both your large and your synthetic triggers on the smaller, faster chart. The large are just large, right? They're the same ones that help us determine momentum against the small. Your synthetics are the large triggers from the large chart. So in order to take this trade on the small chart, we want them overlapping. We want them one on top of the other. We want them wide and angled in the direction of the trend. And then we'll just seek out the areas that are nestled within. So let me give you this picture of favorable large triggers. Because the tighter the triggers are one on top of the other, the smaller your window of opportunity when that small crowd forces a pullback. So we'll go back to the instructions here. When the small crowd forces the pullback, it's going to start with a reversal bar on the small chart. It's going to give you that one down bar after all of those up bars. This is where you will create your window of opportunity, that point where the market is most likely to continue. And for a long trade, your window of opportunity is going to extend from the highest point of support to the lowest point of support inside of favorable large triggers. And then for a short trade, because I just want you to see it both directions, your window of opportunity extends from the lowest point of resistance to the highest point of resistance inside of those favorable large triggers. And this picture is amazing because there's only one line inside of those favorable large triggers, and look at where the market bounces. And then this picture gives you that idea of how the two correspond. When the large chart says up, the large chart has no terminations, there's that tail that we spoke of. Notice that the circle on the tail lines up with an area of support inside of favorable large triggers. This is how the two come together to give you that entry. So when we're looking at it, the reversal bar prints, you're just going to make a box. Use the drawing tool, use your mind, your imagination, whatever you need to use. And you're going to create a window of opportunity from your highest point of support to your lowest point of support. And then you're going to activate a limit order. You're going to right click on your chart and you're going to have an order waiting for this market to come back to you. And if the market pulls back to your limit order at the highest point of support, you're now in a long trade. Guys, this entry is what creates manageable trade. This entry is what gives you the least amount of risk. This entry is what gives you the highest profit potential. So let's go through exactly what's happening. The large chart, we'll write it out. The large chart, the high time frame, that one bar, it tells you that you have odds favorable momentum, and that's rule number one met. And it says that there's no termination conditions, and that's rule number two met. Everybody good so far? Now look at the small chart. Only after those are done. So on the small chart, we're going to wait for the reversal bar, that down bar after all that up business. And you guys are going to identify where your favorable large triggers are. From the highest point of the triggers to the lowest point of the triggers. This is not your window of opportunity. This is not the range where the market is likely to continue. Your window of opportunity will get tightened up, guys. From your highest point of support, this mid-band, to your lowest point of support, these yellow 1-to-1s. Good morning, Dwight. This box represents where the market is most likely to continue. This box represents your window of opportunity. And should that market come down to the top of the window, Nexgen users are in this trade. You are in a long position. And remember that you're not in a long position because you hope the market would go up. You're in a long position because you have the advantage of momentum on the largest chart. It said that it's likely to continue in the direction of the trend. You also had the advantage of a clear path. It hadn't reached one of those key points in the market, hadn't hit fibs or divergence lines or even yellow 1-to-1s. And then finally, you have the advantage of an entry area because you waited for a pullback to an area inside of favorable large triggers. You are able to identify where the market is most likely to continue. Guys, give me a Y in the room if you're with me. Large chart leads the way, tells you to look for a trade. Small chart's going to refine it. And if it comes to the top of your window, you are long and you're feeling absolutely wonderful about it because of all the advantages. And then you have to remind yourself that it is a window, right? And it may go to the bottom of the window. So if you see a negative tick, a negative 2, 3, 4, 5 ticks, I want you to remind yourself that I'm at that point where the market is most likely to continue. And it's okay for the market to fluctuate against me a little bit because I am on a smaller, faster chart. And then the other side of that is, guys, we know exactly where the market is likely to continue, which means we can identify without question where price should not go if we want to stay in this trade. This is how Nexgen users have the advantage of managing their risk long before they ever manage their profits. We're going to put a protective stop outside of the window of opportunity where the market shouldn't go, 3 or 4 ticks below that lowest point of support. And if the market decides to push through, well, we're going to catch it and we're going to say we no longer want to be in this trade. We've lost the advantage of being where the market is likely to continue. Therefore, we're going to let our protective stop do its job. And I want you to remind yourself that anything that wins, man, my Snagit is struggling today. Anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30. And guys, this is a cost of doing business. And you know, the one thing that I know for sure is that people lose trades all the time. I've never met anybody, successful traders, that don't take losses during the day. And what you'll find is that when you embrace this methodology, when you keep it focused on the simplicity, the idea that 3 rules creating 3 advantages on only 2 charts is your best chance of success to become a chart reader, what you find is that if it does hit that stop, it doesn't affect you the way it would normally, because you're like, man, this one had more potential to go than it didn't. This was the best of the best. This was everything that I look for in a trade. And I'm absolutely positively going to take it because I know through study, through repetition, through class feedback, that this is a trade 70 to 80% of the time finds its way to that next profit target. So your first 20 days with Nexgen, guys, is designed on creating trust in the methodology, being able to study it, to go back, to see that it does in fact happen over and over. And you're going to do that with these tails on the large chart. We're going to scroll back on the large chart and we're going to look for odds favorable and we're going to look for a clear path and circle the tail. And if it lines up with an area inside of favorable large triggers, this allows you to get that recognition, to understand what it is we're looking for and what it is you're looking at. Strong trigger lines, rule number 1. No termination conditions, rule number 2. There's your pullback directly to support inside of favorable large triggers. Guys, I want you to take as many pictures of this as you possibly can. I want you to go back and study it with the intent to make sure that this methodology isn't true. I want you to find rule 1 met, rule 2 met, and just circle. Look at that, coming off of a termination. Let's see what this looked like. And this was about 6:46 in the morning. And there's your pullback to resistance right inside of favorable large triggers. Guys, it's hard to not make a living on this, right? It's difficult to not be able to take that. So David, I want you to change UGG to something that lets me know what you were thinking. And guys, I'm going to tell you right now, I'm going to be a pain in your butt because I want you to be successful. David, tell me what you were looking at. Let's go through it. Did you have odds favorable momentum, a clear path, and an entry area? Did you get in at the area inside of favorable large triggers? And was your stop maybe where the market shouldn't go? Let's talk about it. Let's look at it and let's dissect it. And guys, this is how you become a confident trader. And that was a great segue. That was a great segue. After Friday's class, did you change your entire trading plan after Friday's class and then study it intently over the weekend? Okay, so write the rules from Friday's class on there for me so I know what you're looking at. Guys, every time you take a picture and present it in the room, write your rules, whether it is a high probability trend trade, an HVA, a counter trade, a momentum trade. I don't care what it is. Tell me why you did what you did. Tell me what the advantages were. Because what's going to happen is we're going to open up your chart and we're going to take a look at it. And David, short indetermination condition, short indetermination condition. You went long with the triggers down and looks like you jumped out. Maybe you got scared. And then you went, that looks like another long with all the triggers below, another long with all the triggers below. There's your first opportunity where you have a chance of an area to break, right? That's the first opportunity where you had the potential for an area to break. And check it out, David. It won. Pretty awesome, right? There's a huge lesson in there, but I don't know why you did this at all. And just, you're asking me, is it a good entry? What area are you trading from right here? I don't see any lines on your chart. I don't see fibs or mid bands. I don't see yellow 1-to-1s. I see a mid band right here. And what did crude oil do off of that one? Divergence pushed back and it just went lower. So understanding what it is that you're looking for so that it becomes repeatable is huge. All right, Chris, you ready? Let me pull up my capture. But David, that would be my entry right there. And I'll tell you what, I would lose that one. That would be a cost of doing business because I had a termination that created a full reversal. I had odds favorable momentum. I had a pullback to an area of support inside of favorable large triggers. And I know that this is a great looking trade. Whoops, where is my TechSmith capture? And Chris, we'll do it together right now. If I click capture and I click and drag from the top to the bottom, it gives me that, that image preview. I click on, are you comfortable getting to this point? Awesome. So here's what we're going to do, and this is what I want you to do. Start with your arrows. And I want you to do this. Rules 1 and 2. I want you to take the call out. Left click. Whoops. If I left click on the chart with the call out highlighted and drag to the right, it's going to give me a box. And then I want you to write odds favorable or strong or rule 1 met, right? Let me know that you know what it is. On the second one with the arrow, no term, right? And I want you to see it. No termination, strong triggers. And then over here, you can use maybe the box. And then call out once again. Get in the habit of writing the rules. Area inside. Whoops. Of favorable large triggers. So what you're doing, Chris, is you're identifying the rules, right? You're saying this is my momentum, this is my no termination conditions, there's my pullback area inside of favorable large triggers. Click copy down here and drop it in the room. And then what we start doing after the second hour is I come through and I go, all right, Chris, let's take a look at what you just posted, bud. And I'm going to open it up and I'm going to have this and I'm going to say, all right, you had odds favorable. Man, what a great look, right? And there were no terminations. That's solid. Rules 1 and 2 are met on your large chart. I noticed that you waited for the reversal bar. You got a pullback to the area of support inside of favorable large triggers. And it turns out these guys are jerks. They pushed right past you. Chris, you had the setup that typically wins 70 to 80% of the time. You had every advantage in place, and it just decided not to do what it typically does more than it doesn't. This is a cost of doing business, but your entry was absolutely perfect, and the advantages were in place, and this is exactly what I want you to repeat each and every day. And you'll be like, wow, thanks, Mark. That was great feedback, and I'm glad that I gave you a chart that told you what I was thinking, because it turns out that I was thinking correctly. So if you want to practice vandalizing a chart, man, go right ahead. But that was an outstanding look. And then this is a large chart. And let's look back here, right? Everything says up. Everything is breaking. Cav, I love that you took that trade. Because it was a beautiful trade. And guys, I'm going to tell you right now, everyone's like, oh, I bet Mark never loses. Guys, I had odds favorable momentum. I had a clear path. And I had the perfect entry inside of favorable large triggers. Guys, this is me trading the exact same method. I did. Practice vandalizing the chart. I took the same trade to the short side, guys. And I lost. And that's okay. Because if I go through and I annotate my chart, I had odds favorable momentum. And I had a clear path. And I had a pullback to an area inside of favorable large triggers. Confession Monday, you traded into a termination condition that didn't work, Paul. So guys, do you see how writing on the chart You're policing yourself. What you're doing is you're saying, this is exactly what I'm looking for. This is exactly what it looks like. And what you can do is you can start saying, man, this was a good trade. This was the right trade. This is the trade that typically wins more than it loses. And you don't have to take my word for it. Come back and circle those tails, right? What do they look like when they happen? That's a termination, full reversal, everything up. We didn't hit the one-to-ones, and it pulls right back to support inside of favorable large triggers. It's a little more advanced, but it's the exact same concept. So we're developing trust for 20 days, guys. We're developing trust. We're getting in at the best of the best spots. Single or any combination? Great question, Dwight. So what does it mean? Let's go. I've got a ton of entry pictures. So if there's one line, and let me show you this one. If there's one line, I love it. That's a mid-band inside of favorable large triggers. That feels good. But what if there is one-to-ones and a mid-band? Now I've got two areas inside of favorable large triggers. Doesn't that kind of double the giddy up? And now I've got a mid-band and two fibs. Holy smokes, I feel amazing about this. So the way these areas behave, guys, is they give you a ricochet spot is the easiest way to put it. Everybody remember Christmas Story when he shot the metal sign and it bounced back and hit him in the eye? Ralphie's right here, guys. This is the metal sign. This creates a bounce point, and this is why taking those trades from areas inside of favorable large triggers creates such an advantage. Oh, Chris, did I answer the wrong question? Thank you, David. Chris, were you looking to write on your chart? Or were you looking to, thank you, David. Were you looking to plot your executions on the smaller chart? Oh. Okay, cool. Awesome. And then David, for the save today, if you right click and go to data series and scroll to the bottom to plot your executions, it'll show you your entries and your exit, whether it's 8 or 7. David gets a gold star today. I love this community, guys. Everybody works together to help everybody. It's pretty amazing. So going back, circling tails, we circled that one earlier. And then once again, guys, this is it. And I can't make this up. This is going through historically. Look at the entry right at the bottom of the window of opportunity. And guys, you can go back and you can scroll and you can look at these pictures over and over. You can test these trades. I simulated the day and I didn't find one trade. Well, you can go back and you can start circling things and looking for opportunities. Sometimes it overruns. That's just kind of a pain in the butt, but it does. And then sometimes you've got odds favorable in an area with the potential to break. But look at how there was losses of momentum on the smaller, faster chart, telling you that this area is less likely to break. So guys, everything begins with the high probability trend trade. Everything starts with understanding and laying a foundation that gives you an opportunity to grow. 3 rules, 2 charts, and now I'm going to give you the recipe for becoming a confident trader ASAP. Guys, this has been proven for decades with Nexgen. Post your pictures in the room. Post everything you do. Post the mistakes, especially the mistakes. Let me see where you're having challenges so that we can work together to correct them. Post your victories because I want to celebrate victories with you. I love celebrating victories with you. If you are looking at a chart and you're like, I don't even know. I don't know what's going on. Take a picture, post it in the room. Let's talk about what you see and see if there's a chart read. See if we're missing some advantages that might be in place. But posting your trades in class is huge, guys. This is how I give you feedback each and every day. This is your private session. If you post something in the room, we're going to talk about it 100%. We're going to make sure that you understand the advantages, the disadvantages, and then we're going to work together to get you where you want to be. The second half of that is, guys, use that spreadsheet that Nexgen gave you. The first page of your spreadsheet is your trade journal. Everything you do, put it in the journal, guys. I took a trade. I felt great. I had a termination that created a full reversal. Here's my advantages. And then what happened? Where's the notes? What was the feedback, right? So the idea is that every morning, I'm going to go back and study what I did yesterday. Every morning, I'm going to look at those trades and I'm going to say, okay, yesterday I did this and it worked and it kept me relaxed, and I'm going to repeat that today. And I'm also going to go, well, yesterday, this didn't work. This made me nervous. This made me anxious. And typically that's when you guys are breaking your rules. And I'm going to choose not to do that today. I'm going to make a conscious choice to not break that rule. But that brief historical study each morning will prepare you for the day and accelerate the learning. And guys, this has been proven time and time again. Post your trades, use the spreadsheet, get recognition through repetition. We just learned the trigger line and the Fibonacci rules for when it's okay to trade. We talked about the advantages, what they look like. You're now capable of going back and studying them. And if you're not, raise your hand and we'll go over it again. What I need you to do is simulate. Don't wait until you think you have it down, guys. Simulate. Get in there. Go nuts. When I was racing motorcycles, we used to say, if you don't go screaming past your limits every now and then, how are you going to know where they are, right? So get out there and make mistakes, but show me the pictures and let's talk about them. And then simplify, guys. Keep it simple. Focus on the high probability trend trade first. Become a chart reader. Give yourself the best chance of success, because that confidence is huge, because your brain's going to want to second guess things. You're going to be scared to lose in the beginning. Everybody is. It's okay to lose, especially on simulator. That's why we use simulator. But you have to learn the looks so that they're easy, guys. And that's where the rest of the spreadsheet comes in. This is your favorite looks. What's the perfect short look? Well, it's odds favorable momentum and absolutely no termination conditions and a beautiful pullback to the area inside of favorable large triggers. You're going to fill your personal trade setups with rule-based trades so that you know the looks so that they become easy. And then the last page is everything that you guys are doing in the room. So when, let's see who's in this list that might be here today, right? When Safia took the perfect high probability trend trade, I know she's in here. There we go. Perfect 50-50 short. I stole her picture. And I said, gosh, Safia, that's beautiful. Termination, full reversal, odds favorable, easy entry, money all the way down. I stole it. But you guys have the opportunity to go back and look at these, to see what people are doing with the software, to look at the advantages. And really, what I want you to do is I want you to police. I want you to look at what they're doing and start asking yourself, right? And then Chris, everything said down and you went long. Yikes. And then you get out and then everything set up and you went short. So Chris, it's the cardinal sin right now is you're fighting momentum and you're fighting direction. And there's going to be a time where you can do that. There really is. No, you're doing great though. And if you take on your right chart and do what we did, because you're plotting on the big chart, right click on your small chart, since that's your entry chart, and show me those text and markers over here. And that way we can see exactly where you enter on the smaller chart, and we'll see how it corresponds with the large chart. But that's awesome, man. Keep practicing. Keep practicing. I love it. And then get in the habit of writing. Why did you do what you did? What made you feel like that was the right trade? And I know that you're just getting in, getting out, working on it now. But as you begin to simulate, make sure that we have that discussion each and every time. So, guys, this is your plan. This is what we're doing in the beginning. We're focusing on the best entries. You can't figure out, are you on capture software? Let me take a picture. Cool. So, okay, so click on call out. You can make the box though, right? Get on there. Whoops. You see the cursor blinking? I'm able to type. If the cursor isn't blinking in there, no matter how much you type, it's not going to go in there. It's going to show up someplace else. So sometimes you have to give it a little double click to get it back in there. Oh yeah, you've got to make the box. So to make the box, left click on your mouse and drag to the bottom right. And you can make it big, small, flip it around. Turn it into like disco, whatever you want. And then once that's blinking in there, you're good to go. You're welcome. That's what the class is for, guys. It's not just learning rules. It's being able to study, right? It's being able to use the software. It's being able to talk about what you see so that you can get feedback. I'm not just here to make day traders. We're here to create chart readers. We're here to give you guys the best path to success to get you where you want to be. And it starts with being able to follow rules, giving yourself a statistical advantage each and every time you enter the market. And that's what this trend trade checklist is designed for. You can print this out, put it on your desktop, and not only will it remind you what you're looking for, this is what I want you to write on your chart when these rules are met. I want you to talk about whether or not it's a termination that created a full reversal. And there's probably one of the best videos John Novak has ever put out right there on the checklist for you. Great homework for tonight. Did you have odds favorable, large trigger momentum, both charts? Were there no termination conditions? Did you have an area inside? Guys, I've never had anybody mark yes to all of these and do worse than 70%. What you're doing is you're creating confidence through the memory of success. You're staying focused on your absolute best entry. Print this out. Grab your biggest, brightest crayon and make sure that you're checking yes each and every time you take a trade. And if you're not, that's okay. But you'll be able to compare and police, and you'll never have to ask, is this a good entry? What you will be able to do is say, hey, check it out. I had every advantage. And then here's the same checklist, but visually for you guys that learn like that. That's how I learn. I have to see and do. When a termination creates a full reversal, that's my good top. That's my good bottom. Here's my odds favorable momentum in an uptrend and a downtrend. And here's my loss of momentum, as anything can happen. Visually, I need to correspond what it looks like with the actual words. Termination conditions, absolutely no trades when the triggers don't break. When the triggers break, I look for opportunities. And then eventually I'm going to move into being able to trade those areas with the potential to break. And then finally, a great visual on the window of opportunity, guys. Being able to recognize where the market is most likely to continue. This not only tells you to wait for the reversal bar, to identify the areas inside of favorable large triggers, but also to not worry about the ones that are outside of the window of opportunity because they're not at the point where the market is most likely to continue. So there's a checklist to get you in. There it is visually. And now I'm going to give you my favorite part of the morning, guys. This is the KISS plan. This is the Keep It Simple Sunshine plan. This is the plan, and I'm going to tell you what this plan is for. This plan is for new users to optimize your chances of success with the high probability trend trade or one of those 50-50 trades, one of those areas with the potential to break trades. But this is a stepping stone in your learning journey. This is helping you become a chart reader so that you can find the looks that work for you, so that you can find the patterns that resonate with you. And you're going to do that through simulation, through study, through class feedback, and continuous practice, guys. You are going to craft a plan that's tailored to your personal goals. And you'll see that a lot in this classroom. You'll see it even more in that traders chat room, where people are taking the advantages of momentum. They're really embracing the idea of termination conditions that create reversals, and they're trading outside of these high probability trend trade scenarios. They're trading outside of this best of the best 70 to 80% because they've been reading their charts, because they're chart readers. And that's kind of the goal, guys. The goal is to get you to where you're kind of running wild and doing your thing, and you feel great about everything that you're doing. But until you have the capability of reading your charts and being able to look at your chart and in a moment's notice understand the advantages, this is designed to keep you focused. It's a simple plan for consistency. And I'm going to tell you right now, you guys that are like, man, I can't wait to go live and I can't wait to make money. I've got people in this room that within their first 30 days with Nexgen, we're getting funded in those prop firms, focusing on this KISS plan, following it to the letter. They're getting in and they're getting funded in these proprietary firms because this focuses on the best of the best entry initially. This gets you into the market where it's most likely to continue. And it reminds you, never fight the large chart direction or triggers, ever. It's a recipe for disaster, guys. So 20 days to find your entry, your best of the best. That's all I want you to do. I want you to steal pictures from the room. I want you to steal the pictures that I take. I want you to go back and circle tails and make sure that you're comfortable with what you're looking for and embrace the advantages initially, because great entries create manageable trades. And that's the second part of what you need to do. When you're comfortable entering the market, of course, you have to do something with that great entry. So the KISS plan has a very mechanical, methodical approach to management. The same way your entries are mechanical and emotionless, so is your management initially as you learn to read your indicators. And it all starts with the great entry. It all starts with the area inside of favorable large triggers, creating that window, knowing where the market is most likely to continue. Guys, 20 days on entries is going to turn you into a super chart reader. Your initial stop goes where the market shouldn't, outside of the window of opportunity. And at this point in time, there's nothing for you to do. You're either going to get stopped out. It's a cost of doing business. It is what it is. Guys, let the market be wrong with dignity. It doesn't know any better. Anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. And it is what it is. Accept it. Or the market's going to bless you with a reversal bar in the direction of that momentum, in the direction of that clear path. And you're going to be able to reduce your risk a couple ticks above that reversal bar, managing your risk before you ever manage your profits. At this point, there's nothing for you to do. It's either going to be a small loss, totally cool, it happens, it's a part of it, or it's going to hit your first target. And if it hits your first target, this one was designed to create confidence. It's only a $100 target. It has the advantage of momentum. There's nothing in the way. It's likely that first target's going to get hit often. And at $100, you close out your first contract of 2. That money's in the bank. They can't take it from you. You feel good. You're feeling great. You're like, oh my gosh, I got money in the bank. And you're going to move your stop to break even. So now you have nothing to lose. You've been paid. You're happy as you can be. That makes it easier for you to remember that the large chart leads the way, that you're in this short trade because of momentum, because of a clear path. You're in this short trade because of the advantages on the large chart. And getting paid and nothing to lose makes it easier to hold for that second contract, that second target. And it's only $200 in the distance, guys. It's not a big move by any means. If you reach that second contract, guys, you just made $300. It's $300 in the bank, right? Doesn't feel like a lot, but if that's all you accomplish each day, that's a $1,500 day, or a $1,500 week, excuse me, which gives you a $6,000 month or a $72,000 year, however you want to break it down, assuming that the best you can do is $150 per contract on a 2 lot. And then your ability to read your charts is going to have you holding for bigger moves. Odds favorable momentum and a clear path, you're going to hold for larger moves. And you're going to be able to recognize when it's appropriate or maybe when it's not. And this is what the spreadsheet really does for you as well, as every great entry has a management opportunity. Here's another one that was presented in class. Beautiful entry, beautiful exit. And then because they were comfortable with their chart reads, because they were comfortable with their entries, we began talking about the situations where you can take it down to that next fib when their momentum is pushing. So you go from $300 trades, suddenly they're $500, $600, $700 trades. And on the same two contracts, you have an opportunity to make a little more money, guys. And this is exactly what we do every day. The same thing that we did this morning. We learn the trigger rules. You guys simulate and post in the room. We're going to get recognition through repetition, and we're going to police ourselves each and every day through participation. The only way you won't get a one-on-one feedback with me is if you don't post in the room. The only way you're going to know if you're doing things right or wrong is if you post in the room. Guys, I'm telling you right now, I have never in the history of being me walked through the grocery store and had somebody go, "Oh my gosh, you're the dude that posted that loser in the Nexgen classroom. Gosh, you're an idiot. I can't believe you did that in front of God and everybody." It's never happened. Probably not going to happen to you. So I want you to feel comfortable. Post in the room, guys. Tell me what you're doing. Tell me why you're doing it. If you are not where you want to be as a day trader yet, if you have gone outside of your simple plan, if you're bending rules and not finding success, go back to the KISS plan for 5 days. I dare you. Let me know where you end up. If you're brand new, embrace the KISS plan for your next 30 days. Get that confidence coming up, and then post in the room all the time. Your conscience says otherwise. Yeah, that's pride. You've seen you've seen Pulp Fiction, right, Cap? That's pride messing with you. Pride never helps. It only hurts. Guys, this is a pivot stop out. Look at support hold. Boom, straight to resistance. Rule number 2 helps me identify when I need to stay calm and let one of the sides take over, guys. This is on the NASDAQ, and this is blue lines holding like a boss. This is red lines holding like a boss. We're waiting for a clear path. And without that clear path, it's easier to do nothing. It costs nothing to do nothing. The S&P has a termination that creates a full reversal, but we're directly into a divergence low. We're sitting on our hands and we're waiting to see who's going to win, the buyers or the sellers. And then crude oil has the potential to break an area coming from a termination condition, but it's not a clear path. My large are still below it, which means that if you choose to take this medium probability trade, you have to be prepared to manage it assertively. And guys, that's my first hour. So I'm going to take 5 minutes. I'm going to walk a lap, refill my water, do all that great stuff. When I come back, we're going to start posting on the pictures in the room. That was me in Walmart, Debbie. Yes, that was me. It's a little embarrassing because I was in the women's lingerie section, but that was me. Guys, look at that. Not a clear path. Holy smokes, it blows right through. Lost some momentum. That's a 50-50 trade. I'm going to tell you right now. You want to be excited about being successful? Your 50-50 trade said don't take it. Or your KISS plan said don't take it. Don't take it. Your KISS plan said that if you're going to risk your money on hoping that an area breaks, it's okay to not have divergence. It's okay to have strong triggers. It's okay to insist on the best of the best. Cav, it's not a bad look, but it's not your best look. Well, Alinsky, my brother, owns the company, so he gives me extra fibs when nobody's looking. I did a full clean out, Alinsky, on my 7 Friday, I think. No, yeah, maybe Friday, maybe Thursday. So I might have a cleaner set than you. Trade your charts. You don't have a reversal bar marker? Right click, go to indicators, Cav, go to, and it should be similar on 8. Go to reversal marker 1 and make sure that show reversals is true. And if it is true and you still don't have it, right click, go to templates, and reload that 13.2 Rinko template and see if that helps. And if that doesn't help, right click and reload all historical data. And if that doesn't help, go to Jason. I'm tapped out. But one of those should get you where you want to be. And while you try that, I'm going to take a break, guys. I'm going to go stretch for a second. I suggest you do it too. It's okay to get up and walk away from your computer every now and then, guys. It's good for the soul. I'll be back in about 5 minutes. If you take a trade, post it. If you have a question, post it. If you don't have any freaking idea what's going on in this chart, take a picture and say, Mark, what the hell's going on in this chart? We're going to spend the rest of the day going through the live market, talking about chart reads and looking at what you guys did. So I want you to keep me busy. I want you to drive these next 2 hours. You tell me what we're going to talk about. I'll be back in 5, guys. Let's get into that second hour. What's going on, Joel? We got odds favorable momentum, don't we? And it's coming down from that termination. And we didn't reach that next area. We came close, not quite. But there's no areas inside of favorable large triggers. If I'm using my rules, guys, they're not met. So here's what I'm going to do. Whoa, can you guys see that? That was wild. Okay. I'm going to scroll up to the top. And I'm going to start looking at the pictures that you guys have posted. I'm not going to lie, guys. There's not a whole lot of pictures today. So we're going to spend a lot of time just looking in the live market and all that good stuff. So we're going to start with Joel. Joel posted last night around 10:26. Joel never sleeps. Joel had a termination that created odds favorable, that had nothing in the way. And he takes the perfect entry inside of favorable large triggers and gets paid on the way down. And he says, disregard me. I'm an old wore-out person. He's an old wore-out person with a hell of a good chart read, though. Guys, check it out. Look at that momentum. Insane. Look at that pinpointed entry, and he makes money. All the way down. Joel, fantastic trade. Gary says, if Joel can do it, I can do it. Odds favorable. Everything is breaking. Gary takes the quick pullback to resistance right there inside of favorable large triggers. Gets paid on the way down. Gary's solid. Quick little snippets, making a little bit of money. And then, guys, I shared this one because I think it's important that you understand this. Transparency is key. I had a termination that created a full reversal, that gave me odds favorable momentum, that gave me a clear path. And, guys, I took that entry inside of favorable large triggers, and I exited when it went beyond the window of opportunity. I didn't annotate my chart because I know exactly what I was doing here. Does everybody see this, though? Does everybody see how absolutely sometimes the market's going to be a butthead? So let's annotate it, right? Because a lot of times this happens and you're sitting at home and you're going, man, this stinks. I'm so sad. I lost and that's no good. Did I have odds favorable momentum? Absolutely. Did I have no terms? Absolutely. Did I have an area inside of favorable large triggers? Yep, I sure did. So I know without question, guys, this is a trade that typically wins 70 to 80% of the time. And since this is in my plan, we'll say that since this pattern is in my plan, I'm obligated to pull the trigger. And I'm not concerned about the result. I'm concerned about the execution. And I want you to think about that. I'm not concerned about the fact that this one lost 6 ticks per contract. I'm more concerned, I would be more concerned if I didn't have odds favorable momentum, or I didn't have a clear path, or I didn't have an area inside of favorable large triggers. So all I'm doing is I'm policing myself. And I'm saying, did I have the advantages? Was it the right trade? Did I get in at the right spot? If I did, then I'm feeling pretty great. And everything is good. And then Gary, you posted, that's YouTube though. John from September. I like that you guys revisit videos. Tell you right now, you end up with a lot better. And then David, we talked about yours, right? Termination for the loss, second shot for the loss. And then you turned around and took 2 longs, but I don't know why. So many trades that you're not showing, David. So many trades without rules. And I'm not trying to beat you up at all here. But I can tell you that this was my path when I first started, is I wanted to show the good instead of the bad. I wanted to make sure that the people in the room thought I was smart because my last name was Novak, and I'm not saying this is what you wanted to do. So let's talk about this one. All right. Let's see if understanding comes from annotation. So, David, do you have odds favorable momentum? And we're only talking about the last trade. Do you have smalls above the large are wide, they're angled in the direction of the trend? Absolutely. What about termination conditions? None, right? We hadn't reached the area. So, David, so far so good, right? You're 100% comfortable with what you're looking for on the large chart. Your rules are met, which means that we turn our eyes to the smaller, faster chart. So far so good, right? So at the time of the reversal bar, from the top of my triggers, the bottom of the triggers are down there somewhere. David, where's the highest point of support? Do you see how it's the midband inside of those triggers? I'll make a line with the arrow. Your limit order, David, if you're following the high probability trend trade rules, goes just above that line. All right. That's a great question. And you know what, David? That just cleared out exactly what you were thinking. Because you had a midband inside of those large triggers, right? And you're like, but Mark, it's an area inside a favorable large trigger. Ah, David, thank you for saying that. Perfect, right? So if on your small chart, on your entry chart, you had said here's a midband, right? And I didn't even put that together. This is where annotation would have helped me a little bit. So we're going to use the lines on the small chart. Thank you for that, David. That's, ideal. And let me grab a good picture of it. Large chart says up. Large chart says go. No terminations, right? It's the small chart, David, where we're looking for those areas inside of favorable large triggers. It's going to be that small chart where we're defining our entry point. We take the advantages 1 and 2 off the large chart the exact same way you did. And then what happens in 1 bar on the large chart happens in 15 to 30 on the smaller, faster chart. Are you with me? This reversal bar is the bottom of this bar. Your pullback to resistance inside of favorable large triggers is the top of the tail. So we actually refine it on this chart so that you can reduce your risk a lot, so you can maximize your profit potential. So when we look at the picture that you posted, instead of giving it that huge pullback all the way to here, right here really becomes that point where the market is most likely to continue. Does that make sense? And this is why, and David, you just solidified why it's so important to post your pictures in class. Because I was wondering why the heck that entry was all the way down there. And just a quick discussion right here, it cleared it up 100% for me. And hopefully you got a little clarity out of it too. So thank you for posting that. Does that make sense? So is that a good entry? I think your better entry is on the small chart, mid-band inside of favorable large triggers. And I think we all know this was part of that 20% that didn't work out. Nice picture. Great lesson in there. Thank you for that. And then let's see what we have. Next one, Miss Sophia coming in and saying when everything is down and everything is strong, she'll take a momentum style trade and she'll get paid at the trouble spots. Beautiful trade, Sophia. Guys, this is not a high probability trend trade. This is a trade that through repetition, through practice, through class feedback and study, Sophia has devised a plan that makes her feel good about the world, that gives her confidence going in. And it's a look that she has tested that wins more than it loses for her. Patience is finally paying off. Nice job, Sophia. And then Paul, termination condition on the large chart. Gotcha. Oops. But after the good top, you turn around and you make it back. Solid trading, Paul. The difference between a pro and a novice is how quickly you recover from mistakes. And Paul, you did a beautiful job recovering. All right. You bought there because the trend turned green on the large. I like it. Entered here because of support. Oh, Chris, this is great. So you hit the line and you thought, I'm going to go long, right? If I can't go short, I might as well go long. You did. You got out quick. And then everything is good. You know what's awesome, Chris? Is I'm going to take a picture of yours. And we're going to talk about it. So this one right here, that's about a 2080, right? When it works, you look freaking brilliant. But more often than not, it smashes right through. Because you could have done the same thing here. You could have done the same thing here, right? You could have also gone short here. Are you still with me in here, Chris? It's the exact same look everywhere. This one happened to work, right? So this is one of those ones where you're like, oh man, this is awesome. I'm good. This is the one that's going to pull money out of your account more often than not, typically. Just with that much momentum, we just don't know what's going to happen yet. But this is absolutely brilliant. When this does hold and the small triggers come up and begin to break above, this is a momentum look. This is right now, Safia is clapping for you. And she's excited that you took that trade because you had a termination condition, right? And it started to get those strong triggers up and you let them break above on a small chart. And this is just a momentum, little pow. And it takes you right up to Fibonacci resistance because of the great bottom. This one, study it. Dig it. Great exit too, getting close to resistance. And then this one, getting short, is just a little premature, right? So we'd want to look for that same great look like this over here, which didn't really happen before it hit support. So I would say absolute luck, right? Which feels good in the moment, but isn't necessarily long-term success. And then that is Rockstar Read. This is the one that I think you can capitalize and repeat and find success with over the long term. Does that make sense? You're welcome. And I'm going to share with you my favorite picture ever, or my favorite book. And this is kind of funny. It's tongue-in-cheek, but it's there to remind new users How to Commit Financial Suicide in One Easy Step by John Novak. Trading against strong triggers is one of the biggest ways new users lose money. And this is on 20 years, like 20 years, 25 years of Nexgen being around and John teaching this. Fighting those large triggers, that strength, that momentum is a killer. And then trading in termination conditions tends to be the next. And I always like to show that because I think it's funny because it reminds you life isn't too terribly serious, right? And then I'm gonna share one more picture, Chris, on the might versus has, and this is a lesson for everybody. But it's easy to see a blue line and say, "Oh my gosh, I have to go long," right? Or I see a red line, I want to go short. But that momentum indicator, guys, when it's strong into that area, there's typically a bounce. The market loves to come back and retest very often on stuff like that. And the price right here where you're hoping resistance will hold, when you let those triggers roll, smalls get to the right side like you did, Chris, is almost always the exact same price where everything is rolling down. And it's kind of neat how that happens. But it gives you the opportunity to see this. All right, can you guys hear me okay? I've got this weird rattling in my iPod. So I always like to show that one too. It may hold, but you're just not sure yet. So small echo. Let me see if I'm hooked in here. I may not be. Usually when there's an echo, haha, it means I'm not connected. Is that better? The one that I just showed? Yeah, this is a range chart, but the idea is the same. If you look at the triggers, when they're strong up, you get that indecision, and then when they finally go back down, this price where you had hoped that it'd hold here is the exact same price. This is a range chart. You'll get to this one, Chris. We're going to build that foundation first, though, because it's amazing once you build a foundation what you're capable of. Ron loves momentum off a termination. Everything says up, and he takes a quick little snippet. He's built a career on that one. And then Dwight, with the reversal mark inside of favorable large triggers on the 5-1, can that be considered an area for entry? Great question. I am going to give you the Sunday school answer. No, because all that is, Dwight, is that's the price at which point this becomes a reversal bar up. That's all it is. It has nothing to do with areas or Fibonacci or anything like that. But if we look at your chart, termination, full reversal, everything says down. We're clearing. Three divergences though, so you're sitting on your hands. When everything rolls, right here becomes a pretty good spot. And then if we do pull up, back to one of those areas of resistance potentially. But that's nothing more than a reversal bar marker. All that does is let you know where the next bar is going to be up. Definitely not an area to trade off of. And then Paul, you take that pull back to resistance, no divergence, 50-50, good top. I love the look. Hope that one worked out for you. And then Gary, everything says up with odds favorable momentum. It is directly into a termination condition, so you manage it assertively. Nice, Gary. Oh, nope, that was Safia. My bad. I should have known when it was directly into a termination condition, huh? Everything says up, termination with reversal. Gary, you take the little pullback and you ride it out. Nice job. Momentum style, without a doubt. It came a little bit lower, but your stop was good and protected you. And then Safia, I know that you're using these triggers, but that's not always your best look. We're all the way up here. That momentum wins, doesn't it? Momentum wins. I love it, guys. Directly into a termination condition. Hey, Craig, welcome to the room. Momentum gets you the retest. Nicely done, Safia. And guys, that's all the pictures. That's everything you've given us so far. So here's crude oil. It's been a tough one today on crude oil. There's a huge fight going on that isn't making it super easy on you guys. This is the NASDAQ. I believe this is the one that we just saw Gary and Safia take. Odds favorable. Pulls right back to support inside of favorable large triggers. Into a termination condition, but with this much momentum, they know that it has a shot. No, Cav, they're not. Yeah, you'll begin to recognize these fights too, Chris. And it's kind of cool. Because at first you don't want to believe them because it means that you don't get to take a trade. But if you take your large chart and squish it like that, look at how solid rule number 2 is here. From resistance to support to resistance to support, lower divergence to a pivot stop out to resistance to the divergence low, back to resistance. I'm telling you right now, guys, if you've never worked with Fibonacci before, so Cav, I did a couple things. The first thing I did is I made it bigger. And then if I take the horizontal axis, just left click on it and squeeze down, I can do it. I mean, you can squeeze it as much as you want, but that's kind of ridiculous, right? And then if you want to get it back, click that capital F. It'll put it back into space. If you are one of those people like I used to be where you end up having all this gray and you're like, well, that's just crazy. I don't need all that. Click on the arrow. And the same token is if you accidentally push your chart, notice how there's no highlighted. So when you have the most current price, it's highlighted black right here. If you ever don't see it, and you're like, man, something's wrong here, this arrow up top will get you back. So crude oil has one of those 50-50 trades, but it has two divergences against it. Not a high probability trade whatsoever. The NASDAQ is coming from a termination directly to support, and it's pulling right back to those large triggers, and they're trying to figure out what the hell they're going to do. And then the S&P is coming from a termination to the tick. We're just waiting for odds favorable momentum. Chop chop, huh, Jose? Is that, oh, that's the 21. Man, even the 21. Notice how those triggers are flat. Guys, this is where, oh, you're going to get bored. You're going to be like, I haven't taken a trade in 30 minutes. I haven't taken a trade in an hour. I haven't taken a trade. And I just wish that I could be in a move right now. And your brain will start going, yeah, but Jose, the triggers are up, man. Check it out. But Jose, look at those divergences pushing up. Oh, go long, Jose. Don't really, Jose. I'm not telling you to go long. But that's what your brain will start doing. Your brain will start trying to convince you to take these trades. Was this into a termination? Safia, what are your rules for a termination condition? Which area cleared? Let's go through it. A fib. Okay. I'm gonna be a smartass for a second, Safia. Was it this fib? Was it this fib? Was it this fib? Was it this fib? That fib? This fib? This fib? This fib or this fib? Which one are you referring to? Okay. So small and large are below this fib, and it pulled right back and acted as resistance. Smalls are below this fib, large are not. So this fib is 50-50. Price reached this fib, all the triggers are above it. So that's a termination condition. Price reached this fib, all the triggers are above. That's a termination condition. Price reached this fib, all the triggers are above. That's a termination condition. This one is 50-50. And then this one all the way up at the top has cleared. Does that make sense, Safia? I know, but price had already reached support, though, hadn't it? So let's go back and, okay. I'm gonna I'm gonna use just the most basic trend trade rule or termination condition rules, Safi, okay? And I know that yours are different. Yours are different, but the most basic, simple, unquestionable building a foundation is that if price reaches, that's the first part, right? Is if price reaches, let me go to the ones on lows here. I have a picture of it. If price reaches the area and the triggers remain above, it's a termination, right? If price reaches the area and the triggers remain below, it's a termination. So if we look at your chart, the recipe is met. Price reached the areas and then the triggers remained above. Therefore, these are termination conditions. That's the most basic. So Gary says it was a termination. By simple definition, absolutely. Everything in this range is 100% termination condition. Everything. Does that make sense? Because price reached it. What's the flip side, Safia? The flip side is that you've got the divergence from the top, you've got strong triggers, you're below the area that you traded off of, right? And then price pulls back to it, and this is your reaction point based off of hitting the support. Um, and I'm not sure that these line up. So I understand exactly where your head was. And guys, this is why we have to trade our own plans. And this is why if Safia posts in the room, it doesn't do any good to say, well, you're trading into a termination condition. And this is it right here, isn't it? Where was it? I'm not sure where that one was. And it was according to your plan. But your question was this into a termination? Absolutely it was. Does it mean that it's not a trade? Absolutely. I know. And he was right, Safia, 100%. But here's the flip side of that. Who cares? It fits your plan, doesn't it? No offense, Gary, if you're listening. Who gives a shit what Gary thinks about your trading? You've got a plan. He's not writing you a check. So, guys, it doesn't do any good to go you're trading into a termination. I know. Because it's not his trade. You're using momentum to try and get through the area. I know exactly how you trade. But it's important to understand, Safia, I can't do this one. This one scares the ever-loving crap out of me. It makes my brother laugh, yeah. But I love it because I know that it's yours and I know that it's your rules. And oh my gosh, I just want to high five you and say, yes, beautiful. You're following your plan perfect. But yeah, I was into a termination. But you knew it, didn't you? David, what does well in all caps and exclamation points mean? Okay. So let's review. Where does momentum come from, David? Let's talk it out because I think it'll help. Because when I talk things out, it does help me very much. Big chart. David, where do your termination conditions come from? Where are the areas defined? Where does your entry come from, David? Which chart gives you the best entry? The big chart? Are you sure about that? So, David, have you ever, and I don't know what you did professionally, but have you ever had a job where you have to count money? Maybe to start the day or end the day, you have to count money anytime in your life. And it's an amazing phenomenon. Did you ever count it wrong? And then the next 10 times you count it wrong? I've done this 100 times, and I don't know why it happens. So if I count something wrong twice, I always used to hand it off to somebody. I'm like, do me a favor, check my math. Because your brain has decided that that's the correct answer because the brain is egotistical, right? So David, we just talked about the large chart leading the way. We talked about the small chart for entry, and you just told me entry from the large chart. So this is your brain, David, that we've got to readjust it. Totally normal. This is the most normal thing in the world. When your brain decides something is true, this is why we don't talk down to ourselves, because if your brain decides it's true, it's going to react like that, right? So you're still looking for that large chart midband and not the areas inside favorable large triggers on the small chart. So David, what I want you to do you have your high probability trend trade checklist in front of you? So I want you to take a highlighter and maybe draw some arrows. Do whatever you need to do in the moment to remind you that it's a small chart for entry. And I think that your reads are awesome on the large chart. But your brain, for whatever reason, is telling you to look for the entry on the large chart, not the small chart, and it's tripping you up just a little bit. Your reads are awesome, right? Like when you look at your charts, hey, take care, Chris. That's odds favorable. That's beautiful. I love everything about it. Um, but it is a 50-50. You did have divergence. And look at what your small chart looks like, David. Do you see how the smalls are on the wrong side of everything? You had divergence. Your area is not inside of favorable large triggers. So if you start writing it out, and I had to do the same thing with termination conditions on the large chart. That was my biggest challenge. Um, for whatever reason, I couldn't put it together. And my brother used to, I won't say make fun of me, but he was like, dude, Mart, how many times are you going to trade into termination conditions? So what I had to do, David, is I literally on like every time I took a picture. So let's say hypothetically that I was looking to take the long right here. Um, I'm looking at, oh, check it out, good bottom and odds favorable and everything says up, right? And then let's see what my small chart looked like. And everything is railing up here. And David, I kid you not, I would trade into this red line 100 out of 100 times because I couldn't get my brain to wrap around that this was my challenge. This was my challenge. Um, and eventually, what I had to start doing is I had to take a picture. And the first thing is I took a quick snapshot of it. And I would have to define whether or not this was a termination before I ever did anything else. Because this was the one thing that my brain couldn't hinge around. And I'd go, oh, that's a term. And I'd stop looking. Or David, and what may work for you is, well, I have odds favorable and I have no termination conditions. Minimize. Once your first two rules are met, David, minimize your large chart. Make a note for you to minimize your large chart and then say, and now I'm going to look for the areas inside of favorable large triggers on the small. And it's pretty cool because we've identified what your brain is trying to do. And now we just have to figure out a way to trick it to get you. I have odds favorable. I have no termination conditions. Lose it. Where's my area inside of favorable large triggers? I don't know if it's going to work. But one thing that I do know is that we'll keep trying until we figure out what it's going to take to make it click, right? So let's say here, termination, odds favorable, lose it. And then you start defining like that. Because David, your chart reads are excellent, and that's flat triggers on a 50-50 with divergence. We're not taking that trade. But your chart reading is amazing, and now we just have to refine your entries. And I'll tell you what, that's not a bad problem to have. That becomes an easy fix. We just got to get you to shift your eyes to the right. So when your rules are met, when you check those first two, minimize the large because you know that you're looking for your entry now. Don't worry about that. Sure. So let's, all right, let me find just a perfect example. Let me get off of, boom. Boom, 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 boom. All right. I want to find one that just is like the most simple form, where everything lines up and it's absolutely beautiful and life is good and all that fun stuff. And it's definitely been a Monday in the market today, guys. All right. Are you ready, David? Here we go. And I'm going to take some of the noise off, okay? Because let's focus on entries. And I think this is a great lesson. It really is. Let's take off our cheater circles. Can't have the cheater circles. All right. So rule number one, odds favorable momentum. So we have it here, right? David, you're a rock star at recognizing that. And Michael, travel the world. Guys, this is great for you guys too, coming through. Odds favorable, no terms. Rules 1 and 2 are met, right? If we pull up that checklist, I'm marking yes, I'm marking yes. Check it out, David. Get the hell off that chart. And we'll center this one. So now everything says down on my small chart. And it's going down, and it's going down. And then my small chart gives me a reversal bar. You with me so far? At the time of the reversal bar, I'm just going to look for my lowest point of resistance. See, there's my triggers, from the top of the triggers to the bottom of the triggers. Let's start with that. Do you see it? Bottom of my trigger lines, top of my trigger lines. So David, my lowest point of resistance closest to price is this Fibonacci resistance. My highest point of resistance happens to be this Fibonacci area right here. Don't care about the small triggers. Couldn't care less about the small triggers. I love that they're outside. See how that's odds favorable momentum? That's good stuff. But rule number 3, David, says that we're going to sell a pullback at an area, I'm going to type it out, inside of favorable large triggers. So, and I'm typing this out for a reason. Because you'll notice that rule number 3 doesn't say sell a pullback at an area inside of favorable large triggers, but what are the small triggers doing? And it doesn't say sell a pullback at an area inside of favorable large triggers, but are there other areas close, right? It just says sell a pullback at an area inside of favorable large triggers. So what we're doing is we're defining that point where the market is most likely to continue. So all you have to do, David, is when you get that reversal bar and you make that little window, put a limit order right at the bottom of it. And then if the market pulls up and hits it, you're in a trade. I've got 2, Joel. So now I'm in there. No, not the mid band, David. So when I say areas, these are the best questions ever. When I say areas, I mean fibs. It can be mid bands. It can be yellow 1-to-1. So it can be any of those 3 areas. So check it out. That's how we create the window. My lowest point of resistance is Fibonacci. My highest point of resistance is Fibonacci. But I also have a mid band in there as well. I have 3 areas where that market is likely to bounce off of because they reside inside of favorable large triggers. I'm going to get in at the bottom though, David. I'm going to get in at that lowest point of resistance because, whoops, on my large chart, I had odds favorable and I had absolutely no termination conditions. Does that make sense? So Pedro, what we're talking about, great question, man. And guys, I love that you're asking these questions on entries. Is Pedro, when your large triggers on the small chart and the synthetic triggers, which are copied over from the large chart, These work together. This is what we call favorable large triggers. The tighter they are, one on top of the other, the smaller your window of opportunity. Because the tighter that they are, the less room there is for lines to be in there. Notice how I've got a midband and support inside a favorable, but because they're so tight, these one-to-ones, this Fibonacci support falls outside. So favorable large triggers is the combination of the two, wide and angled in the direction. And this is what gives us that smallest window of opportunity. One-to-ones are outside. Midband is inside. Midband inside. We don't worry about the areas outside. Take care, Safia. So the tighter they are, well, then you have to ask yourself, do you want to take the trade? Are you willing to put the risk on it? And let me show you. You know I have pictures for everything, Pedro. That's that's favorable large triggers. Concise, low risk. That's split triggers. Is it going to go from the midband? Is it going to run all the way down to the top of them? Is it going to run down to the bottom of them? If they look like this, I don't care if it runs to the bottom of it. They're tight. If it looks like this, I don't know where it's going to go. Does that make sense? So you're absolutely right. Sometimes they're not one on top of the other. But what we're talking about right now is your best chance. Your best chance stems from the tighter they are. And here they're not as tight. Do you see it? They're one on top of the other. But do you notice, Pedro, and I think that this is a good lesson on it, I don't have any areas up here at all. All of my areas reside in the lower spot. Fibs, midbands, fibs. No, I didn't, Pedro. So let me clarify. I'm looking for areas from the top to the bottom. Does that make sense? I'm looking for areas from the top to the bottom. So the tighter they are, the smaller my search area is. But my window of opportunity extends from the highest point of resistance to the lowest point of resistance. Does that make sense? The window is from area to area, but where I'm looking to create the window is inside of the range of the triggers. I think that's an amazing question. And hopefully we're getting a little clarity for not just you, but other folks. So when I go through and I talk about the entries in the class in the first round of entries, let me show you exactly what I'm doing when I do this. And this is absolutely, it is, which is where that area starts to grow exponentially, Pedro. If I had a fib up here, can we play just imagination for a second? If this was resistance right here, let me make it look like resistance a little bit just to help with the imagination. Then my window of opportunity would be that big. Does that make sense? Highest point of resistance, lowest point of resistance? These are outstanding questions. But since there's no area up there, that becomes my window. So, David, we're looking for areas inside of favorable large triggers. I want you to embrace the wording. Pull back to an area inside of favorable large triggers. So this becomes your entry right here, David. And check it out. That's exactly where it bounces. And look at where our circle ended up, right on that little tail. And that's the methodology, 100%. And sometimes it won't make it to the areas, and that may not be your trade. And let's see if there's another one over here, 933. What do you think? Pullback, area of support right inside of those favorable. And this is another one of those instances, and I hope you guys see it. That's the acceleration point right there. But look at where the bottom is. It's right on the tail. Odds favorable, clear path, reversal bar. We look from the top of the triggers to the bottom of the triggers, and then we refine that even further down to there is one area of support inside of that favorable large trigger. Does that make sense? So our limit order goes right there, right at the top. Does that help a little bit, David? And then, Pedro, here's a great example. Look at those split trigger lines. This is right now, it's very different. The picture is going to change depending on the market. I'm not sure which pictures you're talking about. I want to be able to look though. So it's going to look different every time, David. It's going to look, one time it may look just picture perfect, right? Everything is beautiful and it comes through like it's meant to be. Um, Sometimes it's just not going to work. Well, yeah, this time is very different, wasn't it? This time I had ugly split triggers and I didn't have wide triggers. So it's going to look different. So the idea, David, is that we pick our best look. What's your best look? What's the one that makes you feel the absolute best? That's mine right there. That's strong triggers, nothing in the way, and then that area inside a favorable large trigger. So the idea is you begin the process of burning this image into your mind, what it's going to take to get you in the market. And then the times where it just looks like crap, you're like, that's not my look. That's odds favorable coming from a good top. If I circle that tiny little tail, it is right back to resistance. And it takes it right down to support. This is a little harder to catch for the new user, but it's the exact same concept, isn't it? So David, if you were waiting for the mid band, it's all the way up here. But if you get in at the lowest point of resistance inside of favorable large triggers, it puts you in right at those one-to-ones. Does that make sense? And then it's just a matter of rinse and repeat. So go back and circle tails and write the words down. So let's just circle this one at 929 and let's see what it looked like when the market came back at 929. I have odds favorable and there's nothing in the way. But David, this one didn't come back to an area inside of favorable large triggers, which means it wasn't a rules-based high probability trend trade, which means that that probably wasn't going to be your entry. And here we had odds favorable and nothing in the way. And this is the one that you showed me. See how the triggers are one on top of the other? There's only one line. That's the one spot where we anticipate this market to bounce. It just didn't on that one. Does that make sense, David? Does that help a little bit? Paul, love it. You waited for the reversal bar with everything saying down. Profits, looking for the next one, no divergence. So David, here it is again. Everything says down. Paul waits for the pullback to the areas inside. He waited for a confirmation bar. But it's that pullback here. It's not the areas here. It's that small chart that leads the way. Termination, triggers cross, multiple divergences. Right here, momentum trade supported by market flow. Even without it, Gary, That's okay. David, I can't tell you how often that happens. Gary, I think you read it beautifully, but it's technically a trend trade as well. It could be either. Does that make sense, Gary? It is an area inside of favorable large triggers. It's a trend trade as much as it is momentum, but they look exactly the same there, which makes it even better. David, I had a gentleman that he wouldn't show up to class, and he would learn things on his own, and then when he misunderstood the rules, he would come back to my class angry. Um, and it wasn't that it didn't bother me. It is what it is. But he would come back and he would have a misunderstanding of the rules. So hypothetically, he would say, um, Mark, I'm looking for an example. Mark, I had odds favorable momentum going into this one, and it's my understanding that if I come from a termination condition, this is supposed to break. And every time he lost this trade into a termination condition, he was mad as hell at me because he believed through his own personal study that this was obligated to break each and every time, and he'd take this loser and he'd get pissed off. Um, and there was a lot of scenarios like that, whether it was termination conditions, what constitutes a broken area. For example, but Mark, my small triggers broke through the area. Well, yeah, your large triggers didn't, and you have divergence. So it was incomplete lesson. So, David, the fact that you're bringing me your confusion is outstanding, and we'll get you exactly where you want to be. But guys, show me your pictures. If you're going to the evaluation, show me your pictures even on the evaluation. I know it sucks. It sucks to show losers. But I'm telling you right now, David, if we would have caught that where the injuries happen before you blew it out, you may not have blown it out because your large chart reads are incredible. You know what? I say it depends. You say how many trades? Only high probability trend trades, David? Or are we including the perfect 50-50 trades? As you grow with the software, there's more opportunities, without a doubt. Sometimes there are, and David, that's the challenge. Is some days it's gangbusters, and it's like perfect trade after perfect trade after perfect trade, and it just keeps happening. And then some days it's like watching molasses in January. It's like the slowest, ugliest, nastiest market ever. Um, and you never know what you're going to get, which is one of the reasons that rules based is so important, right? Like Cav, today's crap. I mean, and it is. Today's look at this. What an ugly market. This was probably a good one. That may have been a good one. That might have been okay. But guys, this isn't an easy market. This isn't a 100% rules-based market kind of day. It's just not giving a statistical opportunity. And what does that mean? That means that we've got to train ourselves to sit on our hands, to do nothing, to say, gosh, my rules aren't met. So if you believe in rule number two, there's no way in hell you're going long here, right? And if you believe that divergence kills a 50-50, then there was no reason to go short here. But if you like a 50-50 without divergence, this was absolutely phenomenal to get you down there. See how that works? No reason to go long. One shot at the short, and then it's over. Up here, the small triggers never broke through. No reason to hope the long works. Down here, triggers never broke through. And guys, sometimes it's not what you do that makes you successful. It's what you don't do. It's not pulling the trigger when you don't have those advantages. And that'll be the most important lesson that anyone ever learns. Support's good. And you can go back at the end of the day, David, and go, well, was that an opportunity right here? That was weak triggers. That was a termination. That was just crazy. That looked great right there. Hadn't quite broken. Let's see. Whoops. What time was that? That was 15:12 yesterday, so that's not even today. But let's go back to 15:12 yesterday. That was my circle right there. That was divergence on a 50-50 on a pivot high, and it didn't work. Um, Michael, you keep getting stopped out. You know it's crazy, and please accept this with the love that it's intended. You haven't shown me one picture. You say today sucks, but you haven't shown me one of your attempts. You haven't shown me one shot at it, right? So, Michael, why would you do that to yourself? The only thing that I want to do is help you. That's it. But I can't do it if you don't show me your pictures. There's nobody that I can't fix. I firmly believe that. There's nobody that can't be fixed. We just took David from looking for large chart entries. Took us 10 minutes, right? David, tomorrow's going to be a better day because now you know where to look for entries. That's what we do, Michael, every day. I want to see your pictures. You been on it too hard? How many trades do you have today? I think my record, oh, that's it? I think my record is like 85. So if you're only at 5, you're doing all right, man. It means that you're trying to follow these rules. But show me what you're doing, and it's probably simple little fixes. It's probably simple little fixes, I promise. Um, it always is. It always is simple little fixes. Oh my gosh. Cav, when my brother gave me the market flow chart for the first time, he gave it to me and it was pretty much, it was like handing a chainsaw to a toddler. He's like, hey, go have fun. And I think I took 127 trades, fortunately on simulator. Um, but I was like, I don't know what I'm doing, and I don't know what I'm doing wrong. And then we backed up a little bit, and I got some rules for it. Michael, I can fix it 100%. I just have to see what you're doing. Weak triggers, area not broken, no areas inside of favorable large triggers. I'm just going to sit on my hands. Odds favorable. If no divergence prints, what is this, NASDAQ? Odds favorable momentum. These areas have the potential to break, but they're not broken. But look how I'm coming straight from those one-to-ones. No divergence prints. Just for grins. I don't have any stops or targets in place. See those split triggers, Pedro? That's where my stop has to go. We'll just put it right there. Area's not broken, area's not broken, area's not broken. I'm relying on momentum, and we're out. Because it's a 50-50. But Pedro, that's the best example of how those split triggers absolutely destroy your ability to manage risk. And David, usually the computer will do what you want. It's the market that won't. The market couldn't care less about us, guys. That's why we trade patterns. Um, and that's kind of where I was going with that one. Guys, I'll play on my simulator all day long. If I enter a trade on simulator, it doesn't always mean that it's the right trade. It means that there's a lesson in it. There's a lesson in the look, and there's something that can be learned from it. Flat large triggers are not momentum, right? No. My mom tried to will me to success. Didn't work there either. No worries. And then, Michael, if you need help with pictures, let me know. Totally what I'm here for. Look how those weak triggers can't seem to push it down. Look at how divergences on the small chart appear to be stopping it. But notice how this market is caught in between resistance and support. The triggers are down. I'm definitely not going long. But boy, I sure would like to see that area break. Let me know that it's not going to hold, that it's not going to bounce that market. And look at that, 50-50. Look at the split in the triggers, guys. There's no advantage there. And look at the split in the triggers, guys. There's no advantage there. So um, keeping it simple at first, keeping it basic, focusing on the easy things, right? Let me show you guys. I always show this because I think that this is a good one for everybody, especially you guys that are like I am, that think that you have to know everything yesterday, right? And a lot of us are like that, guys. Learning to day trade is like eating an elephant. It's not difficult, but you have to have realistic expectations. So this class is taught in a very foundational approach. The class is taught to teach you the most basic skill to take you to the next level. Understanding trend is the first one, guys, and then committing to your understanding, committing to only looking for rules met longs, only looking for rules met shorts that correspond with the color of the background. And then once you've established trend, going to rule number one and making sure that you're comfortable with the concept. And I feel really okay saying that anybody in this room could pull odds favorable momentum out of the air. And you could say that's it without question. I know that the separation of the triggers is my best look. I know when they're both wide is my best look. Guys, 1 and 2 is super easy, right? 1 and 2 are probably the easiest lessons that you're going to get. And then once you have those two in place, let's go like this. Well, then you've got to get to the point to where you're comfortable with termination conditions, where you've got a good idea of when an area is broken and when it's not broken, and you can do that math in your head. Price reached it, no triggers, sit on my hands. This takes some of us longer than others, guys. I fought this idea for a long time, and it robbed me of success. And I can tell you that it's not because I don't understand the concept, it's because I didn't believe the concept, because I didn't believe that an area wouldn't break if I, like David said, tried to will it to go through that area. But the reality is termination conditions work very well. And you notice how your first 3 lessons are on one chart. That's it. All you have to focus on is one chart to get these very simple basics down. And then once you have the trend and you have momentum and you have a clear path, then we start that next process, getting in at the best of the best area. And guys, it's more advanced because now I'm not on the large chart. I'm moving to a completely different chart and I'm working on my entries. So we learn to read the large chart first, and then we learn to refine it on the small chart. And I'm telling you right now, it's not a difficult task if you do it one at a time. If you woke up this morning and you said, I'm going to make $1 million, instead of waking up this morning and saying, this is what it's going to take to make $1 million, then you're chasing money and you're not focusing on the process. And when you don't focus on the process, it tends to be disadvantageous. This is all the new user needs, right? So if you didn't have this basic understanding, but you tried to go to Apex and get them to fund you, what are your chances of success, right? Probably not that great. If you don't have a plan written down in front of you that tells you exactly what you're looking for, where you're looking for it, then it becomes harder. If you haven't tested that plan to make sure that it wins more than it loses, you're creating a disadvantage for yourself. And then this is just the first part, right? Getting into the market at the right spot. Once you learn how to get in at the right spot, well, then you've got to start working on your management side of things, guys. Day trading doesn't have to be difficult. Is there a volume indicator for your platform? Um, that's kind of what market flow is. Is that what you need, Michael? You need a volume indicator? You can put one on there, right? I mean, it's so. Can I give it back to just basics? Michael, if you have strong triggers and nothing in the way, and then you have an area inside of favorable large triggers, I don't think you need a volume indicator. I don't think you need to look at the MACD BBs. I don't think you need stochastics. I don't even know what the hell those are. Um, I don't think you need 17 time frames. I don't think that you need tick bars and all the other different things that are out there. I honestly believe, Michael, that it can be simple. I believe that you can find success through simplicity. And I don't even know what a volume indicator is or how I would use it, how knowing what the volume in the market would do to create an advantage for me. It doesn't mean that it couldn't, because I'm a little ignorant to things outside of Nexgen. But what I do know is that without having any knowledge of volume indicators, oh, right on. So check this out, and you can do this on either one. I'll do it on 7 since that's what I'm up on. So there is a tool if you go to File and go to Market Analyzer. This is a tool that'll allow you to see that. Where I can put, for instance, crude oil, right? There's the volume. So we've got this. You can absolutely do this. But what direction is that volume moving, right? Is it bouncing from areas? Has it already reached the area? Um, so how I'll use this one, Michael, is when contracts roll. We may do it. There's the NASDAQ. But again, it doesn't tell me anything more than the contracts being traded. So it might be a useful tool on split days, like when the markets are rolling and you want to decide which contract to trade. Do I want to be on the January or the December? That's how I use it. But I really just kind of keep it. My trend is up, my large are up, but I just have to get through those areas. And guys, I'm going to tell you one thing is if you find an addition that works well, let me know. I'm not so pompous that I won't accept. All right, David. Odds favorable momentum. Love it. So let's do this. So right here, David, absolutely odds favorable momentum. Would you agree? But that was 15 minutes ago. What is it right here? Guys, do I have anybody help me out here? Do I have odds favorable momentum? If I'm looking at the most current bar, my smalls are up, my large are down. I don't have the momentum. No. I also don't have a clear path because my triggers hadn't broken. And then David, in order to have favorable large triggers, I think this is a great question. And I'm going to tell you right now, I've been in this position, and this is where I'm just like, now I'm just frustrated as shit. And I hope you're not there. I want both the large and the synthetic strong angled in the direction of the trend, right? So in order for this to happen, I really have to have odds favorable momentum on the large chart. So what you did, David, is you abandoned your amazing ability to read a large chart, and you looked for a line inside of triggers. So if the large triggers are up and the fib is blue, I probably don't want to be going short, right? My synthetics are down, my large are up, there's indecision. And I do have an area inside of them, but I don't have any rules met on the large chart. Does that make sense? So you're absolutely right in the sense that you're looking for areas inside of favorable large triggers, but you kind of completely abandoned the large chart on that one. You forgot to look for the advantages on the large chart and see how it pushed up higher. And let's see if we can find an example. And there's just not one where everything agrees to line up. So we're just in a little patience point right now. But yes, you were looking for areas inside of favorable large triggers. Um, Termination, everything's beautiful, odds favorable, perfect entry. That's a pretty big stop. That's the perfect 50-50 though, isn't it, D-Rock? That's everything I look for a 50-50. That's solid. Super strong triggers. I mean, that's everything. No, that happens. Market's not playing nice today so much. Maybe it'll sort out after lunch. Maybe they're just hangry right now. But I mean, look at that. And this is one of the things that I like to show you guys too. And this is why we use the most current bar. So this one bar on the large chart, if I circle it or square it, however you want to say it, those are all the bars that are happening in there, right? Oh, it's going up. No, wait, it's going down. No, it's off support. Ah, there's more divergences. But do you notice how on the large chart, I've got flat large triggers? They're not above support. That's not rule number one. And that's not rule number two. And I'm telling you guys, once you go through the basics and you allow it to be simple, you can begin to eliminate these trades that don't have the advantages. And once you learn to eliminate the trades without advantages, when you do have the advantages and you do take that 70 to 80% win, it creates an opportunity to not give it back through hope and stuff like that. So what do you guys want to talk about? We have 30 minutes. I'm through all your pictures. I think we've gotten your questions taken care of, and I'm not going to lie that the market's not giving a lot of opportunities right now. So when it's not, my best course of action is to really not do anything. Um, and this is something that I want to remind you new users. I'm going to pull this up right here. This is from the late Mark Douglas. Um, and I want to post this in the room because I'm a huge fan of process yields results. I'm a huge fan of process yields results. And one of the biggest things, and this is, I suck at golf. Let me throw that out there. I'm a horrible golfer, but I'm trying to become a better golfer. And every time I go to the course and I say, I'm going to shoot an 85, I'm going to shoot an 86, I'm going to get a birdie. Um, oh, I'm sorry, Dwight, I thought I got it. About the reversal bar marker? Yeah, not an area. Fibs, midbands, yellow, one-to-ones. That's just pinpointing where it becomes an up bar in that picture. Thanks, Gino. But the truth of the matter is I've hit great shots, and I've hit wonderful shots and great contact and beautiful ball flight, and it goes right where I want it. And when I've done that, I've done it because I had the process. I had the process down, right? I knew what I had to do and I actually followed it. But guys, I'm not in that muscle memory point yet. So I have to think about it every time. I have to think about what I'm doing. I have to think about the swing, the stance, the grip, the backswing, the arm straight, and I have to think about all these different components that create a good swing, and a good swing creates a low score. And I'm not there yet, but I will get there because I'm studying and I'm trying and I'm having fun and doing it. And I just enjoy being on the golf course. And I love the challenge. I love that it's not easy. But trading is very similar, guys. You don't get paid because you want to get paid. You get paid more often than not when the process is solid. Instead of saying, I want to make $500, why don't you say, I want to have odds favorable momentum and I want to have a clear path and I want to have an entry area, because it's this proven methodology that yields results. It's this process that gets me to where I want to be. So that little Mark Douglas snippet is when you stop expecting to win every trade. You'll start winning most of your trades because you stop caring about the result and you focus on the execution of the method. And when you focus on the execution of the method, you know that it provides a statistical advantage. And if there's a statistical advantage that has been proven through study, through repetition, through back testing to win more than it loses, then it doesn't make sense not to take it. And Mark Douglas had an amazing video before he passed where he talked about, if you flip a coin, you never know what's going to happen, right? But if you weight one side of that coin, if you put a little piece of gum or something on there, then you have turned the tables. And now you have a statistical advantage where it's always going to hit heads more than it hits tails. And it may not hit it every time, but now you know that that coin flip is more likely to lean in the direction of heads than tails. And that's why you bet on heads every time, knowing full well that you're likely to win more than you lose, guys. And trading is very much like that. Trading is understanding that when you follow the path, you're more likely to win than lose. That's it. And as you deviate from the path, the opposite is true. So it's not only understanding the process, but it's learning to commit to the process as well. And I think that that's a huge part of what we do. And as you grow in the process, oops, Michael, post some pictures. Let's see. So this is what you're seeing. Awesome. Are you comfortable writing on the chart yet, Michael, using that call out button? Cool. So that would be the next part. And I have to play like a little whatever. So let me tell you what I'm seeing. You can tell me if it's what you saw. Smalls are above the large, so I know I don't have odds favorable momentum. All of my triggers are below support, so I know it's acting as resistance. Yeah. 1, 2, 3, 4, 5 divergences here. And just indecision, right? Everywhere. What does that mean? That means that's a go make a sandwich pattern, right? I don't have the advantage one way or the other. I'm going to wait for things to clear out. Yeah, you're absolutely right, man. That's all sorts of nasty there. I don't want that. And then Cav, when that termination, everything starts to roll. I don't know where your entry was. But Cav taking advantage. Weak triggers, things start to roll, things change over here. And he says, let's get up to that midband. Let's get up to that next termination condition. Cav, I would have loved to have seen your entry and what sort of stuff you had to sit through. But I think it looks like it was a pretty solid shot. Somewhere over here, Cav, smalls get above, diverges 81.54. Right on. That's tough because it's hard. They're just messing with you here. I love that you knew where it was likely to go, though. Solid. Can a synthetic large inside of large green large triggers be an area? All right. Fibs, midbands, yellow 1-to-1s. If it's not one of those, Dwight, for the high probability trend trade, the answer will always be no. And I know that's almost oversimplifying, right? Guys, remember that my job is to lay a foundation. My job is to get you to the point to where you're focused on the absolute best of the best. Your study is going to take you next level. And Dwight, I'm not saying that one day you might not take a pullback to this synthetic trigger that rolled, because look at it on the large chart. You ready? That's a termination. that's creating the full reversal. You don't have odds favorable momentum yet, but look at how it pulls back right to that synthetic, right to that synthetic, right at support, right? This may be a trade for you one day, Dwight, but right now, yeah, it's kind of ugly because it's already hit resistance. It already hit 86 over here, but over here, see how your smalls are up strong? See how your large have rolled? See how there's no divergence and it pulls right back to support right there? Why not focus on the fib rather than that synthetic trigger with no life to it? Does that make sense? Termination, rolls, true story, Dwight, right here, maybe the close above. That's your best look to take it up to 86. That's 5 points on the S&P. That doesn't suck. That'll get you 300 on a 2-lot. Great picture. So don't focus on those triggers. Focus on like what's happening, right? Look at the roll. Look at the pullback, no divergence, stuff like that. Put it all together. Great job. I like the picture. But use those fibs. Use those one-to-ones. Guys, there it is again, 50-50. It's just so ugly. UGLY. It ain't got no alibi. Nothing to do. Look at that. There was your 50-50 with no divergence. All of that nonsense. And guys, this one fits the KISS plan 100%. All the divergences confirm the overrun. Odds favorable, no divergence, strong triggers. Stop has to go outside of those synthetics a little bit. Two bars down on the large. So, all right, Jose, I just want to make sure that I'm going to go through what I see and let me know what you think. So right here, tons of a loss of momentum, right? And you're thinking to yourself, is it going to go down? Is it going to go up? I'm not sure. And then over here, I had like 173 divergences confirming that this was probably overrun. So let's start there where it's coming from. Everybody's good with that? You're not trading into it. And then once this heads up, right? So let's go through it, Pedro. Small triggers, use the terminology, have smashed through the area of concern. Guys, give me a Y in the room if you're with me. Small triggers have absolutely smashed through the area of concern, these yellow one-to-ones. Large triggers are still below. So hold on. What does that mean in the wonderful world of trades? That's a 50-50 look. It means that 50% of my trigger lines are above, 50% are not. So 50-50 with odds favorable momentum means the area has the potential to break. Is everybody comfortable with this concept? This is your first medium probability trade. This is overrun, and it was confirmed by the multiple divergences in the same area. So when the large triggers get back above the overrun, guys, you can call this a good bottom. But what we're looking at is an area with the potential to break. So because it's not broken, let's do this. It is not a clear path. Rule 2 not met. Can't be high probability trend trade. Is everybody comfortable with that? Because it's not a clear path, it is not a high probability trend trade. Because what we've done, I love this example. Because what we've done is we have momentum on the large chart. We don't have a clear path on the entry chart or on the large chart. So what we're going to do is we're going to make sure that we don't sacrifice momentum or an entry area on the small chart. And guys, let me know if you're with this. That means that I have no divergence, because divergence would be a loss of momentum. That's the first thing I'm looking for. What else do I have? I have strong triggers. How do I know I have strong triggers? Because the small and large are separated a lot. Where's my window of opportunity? From the highest point of support to the lowest point of support inside of favorable large triggers. Guys, this is where the market's likely to bounce. Remember that split trigger lesson where we don't know if it's going to go to the top, to the bottom, inside the trigger? So I'm outside with my stop a little bit. Which means that if I'm in at 74, my stop is about 62-ish, 61-ish. 3 or 4 ticks outside. Does that make sense? It should be on YouTube, Joel. Was that 11.2? 11.3? Thank you, Ellen. There you go. Stop outside. Okay. So your plan is always placed below the reversal bar marker, even if, Jose, the reversal bar marker is still in the window of opportunity? And that's okay. It's your plan. All right. So you didn't take the trade. Totally cool. No worries. But when this bar prints, I still have odds favorable momentum. I still have no term. I still have that 50-50. I still have no divergence. I still have strong triggers, and I still have the window of opportunity. I'm totally cool with your plan. I think that you may miss some opportunities, but that's okay. And then when divergence prints, it changes the potential scenario. No worries, Jose. I just don't have any rules about reversal bars on the large chart. Because sometimes you're going to get one. So when the rules are met, I like to go to the small chart. Now we're 50-50 with 2 divergences. If you took the shot without divergence, you've probably managed out of it. 50-50, no divergence, perfect entry, target one hit, not willing to lose. Allen, I like that one. And then Alinsky, still a 50-50. You're still on that divergence high, even though your 1-to-1 stopped printing. And your large triggers haven't made it through this area either at 70. Do you see it right there, that blue fib? Right on. Still 50-50. Nice job, guys. Michael. Let's see what we have. And then you went long all the way up here. So Michael, let's go through it the same way we just did with everybody. That's okay. Good. I want you stopped out with a loss on this one because it's simulator. And we'll go through a couple different. So the first one without divergence, this was your entry, Michael, all the way over here. And let's go through it. We have odds favorable. I love it. But we're not a clear path. We don't have a clear path to the upside. Do you understand that part of it? And we just talked through it a little bit as well. When the small smash through and the larger below, this area has the potential to break, but it doesn't break. Your pullback that happened right here off screen gave you a no divergence pullback to it. That's the best of the best for the 50-50. Let me go back to my pictures. This is the perfect 50-50 trade because there's no loss of momentum. You still have strong triggers. You have the window of opportunity. But by the time you get in, that was your pullback to support if you were going to take it. So now you've had a loss of momentum. You don't have momentum in the triggers, and you still don't have an area that was broken. So the whole scenario changed. And let me go to crude. With no divergence, that becomes the easiest of the easy to take. With one divergence, it becomes more difficult. With two divergences, it becomes more difficult still because we still haven't cleared the area, and now we're sacrificing momentum. And now look at the split on the triggers. Everything's kind of just unraveling, but this first one was pretty concise. Does that make sense? And that's pretty much the path for new folks. It was for me. And it was funny because I would do it just like this. Guys, and I love sharing the problems that I had, or the challenges or the mistakes that I made. So when this was pulling back, I'm like, I think I might, I'm not sure. Is that the trade? Could that be the trade? I don't know. It could be the trade. I wonder if that's the trade. That could have, oh shit, that was the trade, right? And I'm all the way up here. I'm like, I missed it. And then I just stopped worrying about whether or not rules are met. Should I get in here? Maybe I shouldn't get in here. It's going to go up. I'll tell you what. I'll get in right here because I missed it down here. And then it comes down here and I get stopped out. And I'm like, oh, no. No, but it was going up. And then I get in right at the highest tick possible. And then it comes through. And what happens is I was focused on getting in at the best of the best, right? But I didn't have the repetitions to make it happen in the moment. Not yet. I didn't have it yet. That's normal. How could I? I was brand new. And then I make these mistakes, and I'm like, wait a minute. Let me show Mark that. Cav, take care. And Mark will say, hey, Michael, that's the same one I took, brother. That's exactly what I did, but let me show you how this becomes your best. And when you don't have the repetitions to catch this one in the moment and you start to overthink it, you're more inclined to take the one that isn't perfect. And this is the 100% normal path. But what happens is through repetition, guys, through practice, through feedback, filling this up. What's the perfect long? Oh, I know exactly what it looks like. I'm not going to miss it, right? What about the perfect short? Come on, click. Oh, now I'm burning this into my brain. I'm etching it into that part of my brain that wants to be consistent. And I know exactly what it looks like to take a long or a short. And then because I'm a little stubborn, I'm just going to keep going through these. There it is again. It's beautiful. And what happens, Michael, is you get it so ingrained in your brain what it looks like when it's perfect through going back and studying, through seeing charts that aren't moving. What it does is it creates this opportunity to catch it in the moment. So here we have one of those 50-50s, right? There's divergence. Oh no, this was high probability. This looks like this morning. Everything says down, the path is clear, perfect entry, gets stopped out. It's a cost of doing business. That's a losing trade that I put into my spreadsheet because it is the best of the best. Look at that. Odds favorable, no terms, pulls right back to support inside of favorable large triggers. and off it goes to the races. So what we're doing, guys, is recognition through repetition. So I want you to go through and start clicking on these 10, 15 a day. Look at them. Look at the momentum. Look at the entries. Look at the areas inside of favorable large triggers and get that in your head, what it looks like when it's absolutely perfect. And then it will become obvious. And then it will become simple. And I used to fight with my brother. Is he in here? Stop telling me it's obvious. Damn it, John, because it's not. Because I'm not there yet. It's not obvious yet. It doesn't have to be obvious in the beginning, but I can get you on the path to obvious. And the path to obvious is posting everything you do in the class so we can have a discussion and using that spreadsheet to create the recognition. And then they do become easy. Then they do become obvious. But you can't rush obvious, guys. You've got to get the work done. You've got to go in. But while you're doing the work, whoops, I can give you something that'll keep you focused on the best of the best. I can give you something that'll optimize your chances for success. Something that'll keep you really just looking for all those advantages. Woo is window of opportunity. My brother did it one day. He goes, he goes, the woo. And all I heard in my head, everybody type it at the same time. When you hear woo, what do you think? Ric Flair, right? If you're anywhere near my age. So now every time I come up with my window of opportunity, I just want to call it the Ric Flair. But it's that window where it's most likely to continue. And then once you know where that is, well, then you can start recognizing where the market shouldn't go. And that's how stop placements come to play. But rinse and repeat. That's it. Rinse and repeat over and over. And you'll get there. Promise, Michael, I'm not going anywhere. Safia has a 50-50 look with tons of momentum, and she takes her perfect entry and gets paid on it. Big bite. Nice trade, Safia. Is the area broken? No. Does it have insanely great momentum? Yes. Remember when I told you guys momentum fixes things? Guys, this is not a high probability trend trade. This is a Safia doing her little dance of kickassery based on her chart reading. You'll get there, but focus on the basics first. I promise you, Safia learned high probability trend trades before she ever started hunting these. David, show me a picture. Take a picture of what you're talking about real quick, and let's talk about the read. Will you do that for me? Because you're asking my artsy-fartsy brain to visualize stuff. And there's probably going to be a unicorn in there somewhere. Or what market are we talking about? I'll go to it. Or I guess I can just start scrolling through. What's it mean? Right here? Crude oil? It means that I'm in an uptrend. Whoops. It means that I have odds favorable momentum. But on my smaller chart is showing change faster than the large chart, right? Large chart says up. Small chart says 3 divergences in the same location. Large chart says up. This thing is slow. Small chart says that we may be pushing lower. And we don't know how much lower can be, right? So while the large chart says up, while the large chart says momentum, I can identify change on a smaller, faster chart. So what it means is it just doesn't agree right now. And your advantage, David, will come from charts that agree. But 3 divergences in the same location may terminate the trend. Notice how we still don't have a clear path. I don't have rules met. So instead of saying stay away, I don't have rules met. But as I grow with the software, David, can we agree that the large chart says up? Can we agree that the large chart has momentum? So why not just let my small chart catch up, right? Why not let my small chart turn? And if it continues up, then we'll look for our opportunities. Michael, will it not load at all? Like you try to open it up and then it just shuts right back down? All right, there's your link to tech support. But sometimes when that happens, there's something corrupt going on in a workspace. And what I do personally when that happens is, and this is, you're not going to like this, but it is what it is I'll go to Documents, I'll go to NinjaTrader 8 with it closed, and I'll get rid of my workspaces. And then I'll just, after I get rid of my workspaces, I'll go to, yeah, for sure. I'll go to Resources and I'll just put some fresh workspaces on there from the Resources page. And 99 out of 100 times, Michael, that's got me right as rain with no problems. Um, David, you just summed up day trading. You are a professional waiter, my friend. And Ron says he hands went to sleep from sitting on them. Um, Take care, D-Rock. One of the hardest things to do, David, is nothing when there's not an advantage. So, Michael, give that a try, and if it doesn't work out, just get with Jason. And I believe it does give you the market flow stuff, Pedro, but they may have to turn it on for you for mission control. So while you'll be able to load a range chart, you'll need to talk to Nexgen about getting the actual market flow indicators on there. It's a package that's available. I think. Pretty sure that's how that works. So yeah, David, patience is key, brother. And then Michael, I hope that fixes it for you. Um, Guys, great class today. Great questions. And I hope that you see the value in it right now. So Michael, Travel the World, I hope you see the value that when you present in class, the feedback is there, guys. The coaching is there. And I'm not going to judge you on the trades that you take. We're just going to talk about the advantages that were present. Because your trades don't have to be my trades, and my trades don't have to be anybody's trade but my own. So great day today, guys. I'm going to be back tomorrow morning at 9 a.m. And when I come back, we're going to do it again. We're going to talk about advantages. We're going to look at your charts. Hopefully the market's in more of a mood to play tomorrow. I hope you have an amazing afternoon. If you trade this afternoon, David, do you see how everything's set up? And the large chart won, didn't it? We just had to be patient. Just be patient. Now I've got a clear path and odds favorable momentum. I love it. Guys, have an awesome afternoon. I will see you tomorrow morning. You guys be good.